All right. Welcome, everybody. Never fear, the milkman is here. You like that, right? I see you smiling. Just throw that on the spot. Please read the disclaimer. We are not professional. Shit. All right. I apologize. I had it open on too many freaking things. Amit and I are not investment professionals. We're not registered advisors. Please keep that in mind. Anything we say is our own personal opinions. And let's get started. Before we get into the market madness, got to say congratulations to somebody. Somebody very important to New York. Mr. Aaron Judge won MVP. Very happy about that, even though we didn't make it to the World Series. Congratulations, Aaron Judge.
Who is Aaron Judge?
You did not just say that.
He's on the Yankees? Why did he win MVP if they didn't even make the World Series?
Woosa. You're trolling me. You definitely know who Aaron Judge is. No?
I have never heard of Aaron Judge. Makes $40 million a year to not make the World Series?
We need to blow up the team is what we need to do. Oh, somebody got my Bad Boys 2 freaking thing. Love it.
I'm just saying, $40 million to not get to the World Series feels aggressive.
I mean, look, the Dodgers were an incredible team. I never thought that we would beat the Dodgers, but at the same time, I do expect Cashman to do something, and I've had a beef with Cashman since 2001. No, I'm sorry. Yeah, the offseason of 2001, I've had a beef with Cashman because I'm not going to rant about this for hours, 30-second rant. I could go on for hours about this. Freaking, they got rid of Tino Martinez when they didn't need a first baseman and Paul O'Neill retired. Barry Bonds was a freaking free agent. Could have got Bonds for right field, kept Tino, but instead we had to go after Giambi. And everybody tried convincing me the Giambino, his number adds up to 7. Mickey Mantle was his idol growing up, blah, 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 blah. Don't care. It was a dumb trade, and they need to just blow up this team. Anyway, Amit, don't worry about the market. We're fine. Everything's fine. I'm here to just.
I'm trying to figure out what the fuck you're talking about, bro. Like what? Like I don't know baseball at all.
Yeah. So the Yankees made a very bad trade in freaking 2001 or 2002. They got Jason Giambi, who I did not want because they didn't need a first baseman. They need a right freaking fielder. And ever since then, I have not liked the route that Cashman has gone down. So anyway. The Dow going down 797 points, the NASDAQ going down 536 points. I just think everybody needs to take a step back.
Did you send Chris the link, by the way?
Of course I did. He even said he got it.
Okay, good. Gotcha. Cool. Yeah, bro, it was an ugly day. Ugly day. We'll talk about kind of what's going on. I mean, I haven't heard from you all day, so people know my thoughts. I mean, I covered everything on the close today, but did you even see kind of what happened today, and what was your reaction to all of it?
No, I saw everything at like 5:30. Okay, I legitimately did not look at a single thing. My phone blew up all day. Couldn't look. I was in the middle of things all day with work.
That's what I was telling people. They were trying to say call you on the close. I'm like, dude, I think he's really busy today. But we're going to talk about
I am going to crack open a blueberry pomegranate just because the market's down. Feel like we need a little refresher. But
you would drink that if the market was up to. You would drink that if we didn't even have a stock market to analyze.
That's right.
So
it's amazing.
It's the joys of life, regardless of the market.
Delicious is what it is. Delicious. Yeah, I mean, look.
What was your reaction to the sell-off in general?
Remember what I told you couple of days ago or maybe a week ago at this point that I was very worried about information not getting out there and the Fed using this as an excuse to potentially not cut rates. Looks like that's happening.
I agree.
So, and I don't have a crystal ball, but I do understand economics, and I understand the way Powell thinks to a degree. He is going to try to use this to not cut, and I think that if we don't get a cut, they're going to be behind the eight ball in 2020 for at least the beginning of 2026. So, I think it's going to be really interesting to see what happens. But one bad day to me doesn't matter. A bad week doesn't matter. And I really think that everybody has to just take the idea of, are you a short-term or long-term investor? And if you're a long-term investor, does your thesis for your investments make sense? And if you freaking are in the S&P for a decent amount of your portfolio, I don't know that you're really going to feel a bad week or a bad month in the long term. So I think that's why I'm able to say grounded a lot, because a good percentage of my portfolio is in funds to a degree. So I don't get crazy volatile swings. Like, yeah, sure, today's not a good day when you open up the accounts, but it would be even worse if I was more allocated toward full-blown technology portfolio.
Yeah, I agree. I don't think anything that has happened today is building a trend, especially given October we hit all-time highs and the digestion of those all-time highs. A lot of these stocks that are down, like, oh, boohoo, Palantir's at 170. It's like, okay. Robinhood's at 120. It's like, okay. Nebius is at 90, okay, or 85. It's like all these names are up so much. It's just the emotional reaction of them reaching that all-time high, coming down, and then, having their consolidation phase. So I don't think there is a structural change in any components of the bullish momentum in this market, but the lack of data, as you said, especially when the White House said we're not doing October CPI, that came out of left field. And I think the market really thought they were going to get that, and they didn't, and now they're upset.
Well, I think there's also more people talking about valuations of tech, potentially a rotation out of tech, broad market rally next year, look at other areas. And to me, that's bullshit. And here's why it's bullshit. Because Tanner and I went through the numbers last night with tech.
I saw, yeah.
Tech is not freaking expensive. Like, we need to have a new definition of tech. And I'm going to go off right now. These people that are the pundits on financial news networks need to reclassify when they talk about technology, what technology actually is. Because there's a big difference from, and I'm going to put some chat favorites in here. There's a big difference when you look at a cohort of CoreWeave, Nebius, Iron, Palantir, Hood. I'll throw SoFi in there, and I'll throw companies like Duolingo in there, versus Amazon, Alphabet, Meta, Apple, Microsoft, NVIDIA. There's a big difference between the two cohorts. One cohort makes up what, maybe 1.5% of the S&P, because only two of the companies I mentioned are actually in the S&P. The other cohort makes up what, 35% or so? So, what are we even talking about? And the fact that Costco and Walmart have a bigger valuation than every company in the Mag 7 except for Tesla, to me, still, this is a market, to me, that's still investable, a market I'm still happy to allocate capital toward the S&P. And I just think that we need to have a much clearer definition of when people talk about tech, what they're actually talking about, because at this point, too many things are getting roped into it. And we can get into semantics that Alphabet and Meta are classified as advertising or communication companies versus tech. But at the end of the day, they're tech companies.
Yeah, I agree. Especially after the recent volatility down, some names are still expensive, obviously, because they have a higher multiple, but the core technology names that make up the S&P, they're not. Now, this rotation thing is like real, because we're seeing it with healthcare and defensives get more inflows, but that's not a bad thing. Like, no, that just means, okay, Google's going to go down, even though Google's still up like 70%, and Lilly's going to go up. Okay, they're more balanced now. Like, where's the bearish? Like, I think the thing that I'm seeing today is everyone saying this is .com 2.0. It's like everyone's forgetting everything that's happened over the past and just like stuck on this narrative of this is the biggest bubble that's blowing up. And it's like we were just here on Friday in terms of prices.
I'm going to bring Chris on in 1 sec. He just got backstage. My rant on what you just said, and I'm just going to bring Chris on now. Chris, what's going on? I knew he was going to have the wrong mic triggered. We should have a bet whenever Chris comes on if he has the right mic turned on or not.
He's busy, dude. He's working all day.
I know.
Yeah, Chris didn't get the blue memo.
Neither did I.
Yeah, we didn't plan this, guys.
We did not plan this. But while Chris is working on the mic, the rebuttal to the whole .com bubble is everybody needs to take a step back and actually do some research. The .com bubble was fueled by venture debt to companies that were pre-revenue that had .com in their name, and it was all a brand new thing and nobody knew what was going on. This is being fueled by the largest companies in the market with balance sheets and cash flow that destroys private equity. Absolutely destroys private equity. They're not freaking tapping the debt markets unless they want to. They're not doing it out of need. Meta didn't tap the debt markets out of need. They could have written a check. They felt that the better use of their cash was staying on the freaking balance sheet than just writing a check. And they certainly have the EBITDA and the cash from operations to handle this build out. So when people start saying this is .com 2.0, sure, you're freaking SMR and Oklo, who gives a shit? Like, yeah, they should not be anywhere near where they are or where they were. But don't tell me Meta at 18 times forward earnings is a crazy valuation. Don't tell me that Alphabet at 22 times forward earnings, and when I say forward, 2027 is a crazy valuation when you actually look at how much profitability they generate. This is a much different scenario. And I'll end it with this. The fact that the brightest minds of the people who built the largest companies in the world are all saying that this is the future and this is where we are staking the future of our companies, I don't care what anybody's opinion is that they're wrong, because I'll bet my money that they're right. And that's where I'll leave that.
Just for everyone's information, this is just a mango. So I like mangoes right before they go super ripe, in which case they become like really, really soft. So I like them like a little bit unripe. And I usually get these from Kroger. So they're really good. So,
Chris, do you ever eat the dried mangoes?
Oh, dude, I love dried mangoes, but I can't do it anymore because the dried mangoes have a lot of sugar in them. So you gotta stay away. Now I'm just
they're like crack. They're like crack.
Yeah. So about what you guys said, I absolutely agree. I think the market kind of overreacted today. I think if you really look at the crux of what happened, I think it was just this. We went into this week thinking that December rate cut guaranteed, it's going to go. And then all of a sudden everyone's getting bullish because, shutdown has come, the over finally. And then all of a sudden a bunch of Fed chairs come out and say, well, you know what? We don't necessarily think that we really need to cut it. And now the entire market's like, wait, what? What do you mean you don't have to cut? Now, the funny thing is, on the ground information, everything is pointing towards a cut that you need to make it. Like unemployment is starting to rise. Like, I don't know if y'all saw Verizon today. Like the news that first
your
came
spreads were looking good today on those 15,000 layoffs, bro.
I know. Well, the thing is, like the CEO during earnings said it, like our goal is to become more efficient. And if you really just dig down into the crux of how like the businesses are dealing with certain things, you could tell that businesses are trying to become more efficient, right? That's why you've seen the layoffs, and a lot of the layoffs that you're seeing are in the junior employees. So, the day that I mentioned, I was like, look, a lot of the younger folk are struggling right now, where the older folk are just kind of, they've got this tribal knowledge within their respective industries that makes them valuable. So companies are willing to hold on to them, but they're really laying a lot of people off. So I think what's happening is, on one hand, you've got input costs that are going up because of tariffs. So if your business is dealing directly with input costs from the tariffs, your margins are getting squeezed. And at the same time, the consumer is weakening. So you can't raise prices without losing market share to competitors. So what's your option? Like, what are you going to do to maintain your margins? Well, you're going to look at your human resources, because that's all you can do, and say, look, where can we eliminate some redundancies? Where can we become more efficient? And that's where the layoffs happen, right? And as those layoffs happen, the economy weakens and we go into this cycle of back and forth of thanks, honey, I appreciate it. Into what we're seeing right now. The other thing is, let's say you're a business like Verizon, who doesn't necessarily deal with a lot of tariff and import costs. Well, they have a lot of debt on the balance sheet that basically is coming due, because a lot of debt that they took on was taken on prior to COVID when rates were really low, right? So the Fed started to raise interest rates in 21, 22. And that's when, if you look at how corporate debt is financed, majority of corporate debt is 5 years out, which means we're hitting that cycle right now of all that old debt rolling over from 3-4% to now 7-8%. And so now that's going to hit your margins. So, on one hand,
why do you think over the past 48 hours, the Fed is starting to care more about inflation? Because if I'm not wrong, at the FOMC meeting, Jay Powell explicitly said the labor market is our concern. And now it's like, maybe we're not restrictive enough. And that, to me, is just weird, given all the announcements we've seen.
They don't have the data. They don't have the data to
but
back up.
Even if they did have data that inflation is going up, which it probably is. I mean, Trump basically admitted with all the tariff reductions he's proposing. Isn't the labor market still more of an issue?
There's a level of pain that I think the Fed is okay with when it comes to the labor market, as long as inflation doesn't reaccelerate beyond. So it's kind of like a balancing act. So if you guys have noticed, inflation is starting to trend higher, right? CPI has been going up. So the question that we have to ask ourselves is, how is the Trump administration going to control that inflation? Because the thing is, the administration needs these rate cuts, right? If you want to get rate cuts done, you cannot justify to the Fed, hey, it's fine, leave inflation at 3%. And then what happens is, right now, the general market consumer is getting pummeled by messaging from the Democrats that, look, inflation is high because of Trump. When we came in, it was 2.4, 2.5. Now Trump is in charge with his stupid tariffs. Our inflation's going to 3% and higher. So now all these people are like, wait a second, I got laid off and inflation is going up. I'm in worse shape under Trump. And the messaging is actually getting through to voters. That's the part. So the Trump administration has to soften its tariff policies, and at the same time has to figure out a way to coax the Fed into cutting. And the thing is, there are people within the Fed that the Trump administration does control via their appointments, but it's not enough to the point where it's like a guaranteed. Like, I think next year we're probably going to be a lot more guaranteed of rate cuts, regardless of whatever the inflation numbers are. But until Powell is gone, you've still got the likes of Bostic and Collins and Kashkari that are gonna, they're gonna try to keep inflation as the primary topic. So I see the labor market deteriorating. It's all around us. You're starting to see announcement of all these layoffs. So I think once the data actually crystallizes and comes out, then the market jitters are going to come back down again into the other direction, which is just like, oh, wait, unemployment is going up, and the Fed's entire tone is going to change from, hey, I think inflation is a problem, to structurally inflation is going down, with the exception of the last probably 6 months, where you've got this giant tailwind of inflation coming from like a couple of key sectors. I'll give you the example, like the key sectors that we should be watching out for. Did you guys know natural gas prices? What's happening to them? Have you guys been tracking that?
I've seen it.
Well,
look at nat gas prices right now.
Yeah, it's up 3%.
No, look at what it is. Look at not 3%. I'm saying look at it year over year.
462. That's not good.
That's really, really bad. That's a giant.
Really high.
That's
wait,
hold on.
What exactly is?
Hold on. So I want to bring somebody on who will help us with this topic. But before we do, we just have to ask one question. Chris Patel, do you know who Aaron Judge is?
Thank you, dude.
Both of you.
Dude, we're too busy worrying about the markets to know about some B-list New York City player who can't make the World Series, dude. Give a fuck about Aaron Judge. Aaron Judge, last name Judge, should have been a lawyer, bro.
Can't believe this. Dougie, what's going on?
See, Doug doesn't know how to use the mic either. I'm not the only one. Y'all are making fun of me. Fuck you, Doug. You don't know how to do your mic either.
We get a 2% down day. People don't know how to unmute.
I was just on another call. There we go. So this mic's working. All right.
Doug, are you outside in the sun right now? Is that why you got the sunglasses on?
Nope. When you come to Houston, you'll find out, Chris.
All right.
His future's just too bright. That's why he's got the sunglasses on. But look, natural gas being at 462 when Brent is at 64 is pretty wild. Normally, we wouldn't see that high of a natural gas price unless crude was much higher. So,
what price should natural gas be?
I mean, Dougie, I defer to you right now. Why is natural gas spiking when Brent and WTI is not?
I'm not really on the buy side of the energy. That's more of a Maddie thing. My speculation would be still because of Europe and like net zero things that they are trying to hit.
No.
You don't think so? Go ahead.
Okay. So natural gas is a byproduct of drilling for oil, right? So if you go to Texas,
right.
Wait. Isn't the reason that like
also processing?
No, but hold on. Isn't the reason that people have just been eating more beans lately?
Yeah. Okay. Great. The real explanation is oil. When you drill oil, one of the byproducts that you get is natural gas. That natural gas is collected, put it, and basically used, right? The challenge is if oil prices are low, the amount of rigs out there for drilling for oil is not that high. That means that the natural gas that you get as a byproduct is now going to be limited. Now, of course, there are sites around the country where you can, get dry gas, which is literally just putting, drilling for natural gas itself. But with the amount of draw that's currently happening with all of these LNG facilities pulling natural gas from inventories, you've got a cold spell here in the South. So you've got pull from users here. And then also all these data centers are coming online around now. So they're all getting piped via natural gas. So a lot of these power plants are drawing natural gas. So you've got this giant draw of natural gas, but the impetus to drill more natural gas is not necessarily there, right? Well, I mean, at $4, of course, it's there, but the ramp up takes time.
Chris. That's what 90% of all the flare you see at a refinery is natural gas.
The problem with the flaring thing is that there's not enough infrastructure that goes around to collect that on every field. I mean, imagine right now constructing pipelines to a field, especially like
I'm not talking about a field. I'm talking about refineries. Large centralized product. They could capture that if they wanted to, but they flare it off.
Really? I didn't know that. I don't know how much of it can actually be captured, but I think that's something that maybe Matt knows more. But the point is, natural gas right now, there's just a lot of demand for natural gas in the country and not that much supply. Now, here's the thing. A lot of natural gas companies, they don't want to risk drilling more and increasing their drilling programs if it means that natural gas prices are just going to come back down again, in which case now you get stuck with a whole lot of capital expenses. Yeah. So the thing is, at some point, natural gas companies will get ramped up. I think that the Trump administration is probably calling every energy CEO they can and just saying, you need to start drilling ASAP, get this goddamn supply going. And the thing is, for the next 3 years, I don't know if you guys have seen the chart with how many LNG facilities are coming online. It is a lot of facilities that are coming online. So
they have
upstream
yeah,
right.
The problem is the price of oil is already so low, so there's no reason to drill for oil.
Mm-hmm.
Maybe if you want to sell the LNG at a high price, but you're not going to sell the oil at a high price.
Exactly. So that's kind of like a double a problem that like I said, the admin has to take. And like I said, even and the electricity prices are starting to rise around the country, which is feeding into the inflation narrative, right? So if you look at here, let me just share my screen. Electricity prices on a monthly basis. Well, this is for the entire country. Let me just do a quick chart. Look at this. You see that? 13 cents now, 18 cents a kilowatt hour.
Is this data centers to you?
Yeah, data centers are definitely competing against us. Look at the increase that we've had. Look at this, and you can see the ramp.
Natural gas fired facilities to meet the demand of electricity.
Yeah, I mean, usually when things like this happen, coal tends to move alongside it because. Let me see. What are
Wait, do you think this is why the headline of the California offshoring drill stuff from yesterday? You think this is related to that?
I'm sorry, say that again.
So there was a headline that Trump is exploring of offshore drilling in California yesterday.
That'll never go through, and not to mention the amount of capital that would cost, the amount of regulatory BS that the courts would throw at him. You could not ramp up fast. You can ramp up to get to where you need to go. But natural gas
that they're going to be drilling off the California coast.
Yeah, look at this. October 16th, literally like 30 days ago, the price of natural gas was $2.80. Now it's $4.61. The one thing I'll tell you guys, do not speculate on natural gas. Natural gas literally is called the winner of most portfolios. But yeah, so natural gas is the highest it's been in quite some time. It actually now is higher than the peak that it was last March. So if I was the Trump administration, this is where I would call the largest producers and say, listen, y'all gotta, especially the ones that have like dry gas production in Haynesville, they need to really ramp up their rig counts. Right here. This is from May. I need the latest one. 2025. Right here. See, rig count drops again as shale the rest on the ropes. That's the problem, man. You keep losing rigs. That's less inventory that's going to come online all at the time when there's more and more demand. So, all right, I'll stop there.
Pretty crazy.
I mean, let's transition to tech. Obviously, there's been a sell-off on that to an extent.
Doug,
yeah, Doug. I mean, what are you thinking about tech, Michael Burry? Like, how are you dissecting all that information?
Michael Burry is a very successful value investor. And anyone who doesn't listen to him when he talks is dumb. That doesn't mean he's always right. I mean, if we look at, historically, the thing he's famous for is for being wrong and losing all his friends, and all his friends thinking that he was just losing all their money until the nanosecond and the switch flipped, and then he was right. But he had still lost all his friends. Is that what's happening here? I don't know. The market is so opaque because this whole tech sector, the whole trade, is centered around OpenAI, which is private. Part of me thinks it should not be legal for OpenAI to remain private at these valuations. But I don't see how you would ever pass a law that says, oh, once a company becomes so valuable, then they have to go public. I mean, Saudi Aramco doesn't suffer from that, so why do we think that OpenAI should? But I am taking steps to de-risk my portfolio and reduce my exposure to anything related to AI, as much as I am a believer in it long term, just because the whole thing is surrounded by a company we can't see into. we don't know what they're doing. And then to make it worse, the secondary and tertiary players are also throwing around, oh, we're what was it? Was it Perplexity that was like, we're going to do 40 billion, or was it
Anthropic?
Anthropic was like, oh yeah, we're going to do 40 billion. It's like, bro, you ain't got 40 billion. Where's that coming from? So I'm just starting to hear numbers thrown around, and there's enough sector level opacity here that I don't think you're no longer trying to find companies that are going to do well, because the whole sector, it's like putting a .com on your name, being an AI now.
Sounds like you sold some Palantir and bought some Verizon, Dougie. That's what it sounds like.
Not sell any Palantir to buy Verizon, but I did buy Verizon. I'm actually done buying Verizon though.
Why are people spamming one in the chat?
That's one of the things I wanted to know, Chris, is what you think there are that are, a Verizon-like play, and since Steve is here, a Verizon-like safety play where I don't have to buy that CEO.
Well, I got a couple for you. My opinion. Nobody should do this. Disclosure, I am a shareholder, and everything I'm about to say, don't follow me into this. I have no idea what I'm talking about. 2 REITs, NNN REIT and Realty Income, I really like. Realty Income has increased the dividend on a quarterly basis for, I think, 116 consecutive quarters. And in a lower rate environment, they both should do pretty well. I'll give you a third one in that. Simon Property Group, I think, will continue to do well. Outside of REITs, because real estate may not be for everybody, because there isn't really a ton of capital appreciation you can get in that, I'll move to pipelines. Maybe not a ton of capital appreciation, but I do think the sector is going to get a re-rating because the infrastructure can't be replicated and it can't be replaced. And Energy Transfer, to me, looks undervalued. It's got an 8% distribution. And I do think that when you look at its peers, its fair value is closer to $20 a share or a unit. Don't freaking freak out. I know the difference between units with MLPs and shares or equity companies, such as a C Corp like Kinder Morgan or OneOK. I also think Enterprise Pride Partners is interesting here, but companies like that, when you see the demand of data centers coming out, we need more energy. Upstream producers are going to have to drill more. That means more volume moving through these infrastructure plays, more volume being stored. And then as we start exporting to Japan and other places in Europe, it's all going to run through the pipes to the Gulf Coast. So Energy Transfer companies like that are just, in my opinion, good safe havens for this type of thing. So those are the 2 things that people don't necessarily look at. And if you don't like the CEO of Verizon and you want income, only thing you got to remember is ET and stuff like that has a K1. So you should talk to an accountant.
You don't think that the energy play is also going to drag, because energy is also tied into this AI trade, right? Yep. So you don't think that that's risking exposure of being on the edge of that bubble?
I don't think AI is a bubble. And if I don't think AI is a bubble and that we're going to keep building data centers, we're going to need more energy. And if we need more energy, the upstream producers have to produce more. I think there's more risk in the upstream producers than the actual pipelines, because for many reasons. But the reason I say I don't think AI is a bubble is just look at the cloud demand from Amazon, Alphabet, and Microsoft. Just those 3 have 700 billion backlog. So that's not CapEx. That's just backlog on other companies contracting with their cloud services. So they're going to have to keep building out data centers. Now, where that actual data center build out stops, I couldn't tell you. Originally, I had thought it was going to stop in 6 months from now. And then I increased it and increased it again. I think we're probably closer to 24 to 36 months of data center build out before it plateaus and it just goes into maintenance mode. But I think a lot's going to be told on the NVIDIA conference call next week.
Someone said that thing in the back looks like a giant dildo. So I was like, it's Lord Ganesh, bro. It's my Ganesh statue. Thanks, Ganesh. keep protecting my portfolio when the market is down. Appreciate you, brother.
Oh, Chris.
What?
Huh. What's going on, Austin?
Hello, hello. Just came for the gym tips. Sitting outside the gym, getting ready to hit chest and back. Figured you're the guy to ask.
You need to get some gains after the portfolio.
Dude, go talk to
Michael
Tanner. Austin knows what's up. Chest and back, opposites, pull push. That's what's up.
Steve, press the layout button. It'll put all 5 of us together.
Starting strength, bro. Starting strength. Mark Ripito.
Which layout button?
Play around with a couple of them. You'll click each one. You'll see. There you go. You got it.
Okay.
If you have not gone down the Mark Ripito rabbit hole at some point, you have missed out on a lot of great content.
Is that like a bodybuilder? Is that who that is?
Strength coach.
Got it. Well, we got to be strong today after that bleeding. Oh my goodness.
Austin, what are you thinking of this sell-off, or at least how are you internalizing it?
I don't think it really broke anything. Like no long-term thesis breakers. Are we really that concerned about 25 basis points? Does that really everything that we just saw over the last year? It all gets thrown out because of 1 month of missed data. I don't think that breaks the thesis. Am I missing something?
No, it just shows how weak the thesis really is, though, right? If the entire market gets shaken out by a very small change, that means that the market is being propped up by very thin level of confidence.
But it's not really shaken out. 2% down is, it's
2% down. 2% down overall market. When you look at the miners, like the Bitcoin, not the Bitcoin miners to the AI trade, they're all down double digits. Quantum's down double digits.
Who cares?
Nuclear's down double digits. No, I'm just saying that there are a lot of people. Listen, Steven, there's a lot of people right now. I asked them, like, hey, what's the long-term investment thesis on this company? And you know what every single one of them tells me? There is no long-term thesis. I'm just going to sell at the top.
Exactly.
I'm going to sell at the top.
Exactly.
I'm like, so how do you know when the top is? He's like, I don't know, but I'm just going to know. I was like, all right.
But that's exactly my point. Like, if these companies get cut in half, who gives a shit?
I think Steve's right here, dude. If quantum and nuclear go to zero, and
it doesn't matter.
And the Bitcoin miners that just pivoted go to zero, like who cares?
I agree with you, but here's the thing: if you are one of those people that's playing that game of musical chairs, you care. That's what
They're
I'm saying.
smarter than me because I can't play that game.
Right. If you're not going to play that game, then you have nothing to worry about. Buy all the Meta, buy all the Google you want. No one is going to say anything. But if your portfolio is loaded up with a bunch of IREN and bit farms, then those people, they have to worry. If you're in a name like Qubits or Rigetti or whatever, look, I'm glad y'all did well over the last 4-5 months where these things quadrupled and 5x'd. But
not quadrupled, bro. They went up 1,000%, 2,000.
I mean, right. With zero revenue. What do you think was going to happen? Yeah,
humor me.
Go ahead.
The fact that Meta, Alphabet, Microsoft, NVIDIA, and Amazon all trade at less than 25 times 2027 earnings, is this really a market that's expensive? I mean, and that's why I keep saying, I know I sound like an asshole about it, but I could give a shit about IREN or SMR or those companies. They mean nothing to the S&P. They're very small companies, and they don't matter for the market. These companies that are the biggest companies in the market that are driving tremendous amount of forward earnings are still growing at huge amounts and are trading like value companies. Like, this is not expensive.
And I think to Steve's point, Chris, when you say the thesis is so fragile, I think this chart right here shows why the thesis is not fragile. It is fragile in those names you mentioned and those sectors, but like for the overall market, right? I think you would agree for the overall market.
But that's exactly what I'm saying. Like we can't look at a couple of bad days and say, oh my God, the market is like the bottom is falling out on this market. I mean, literally, Google is at the same price it was last week. Right, this is not like, this is not a crazy like market drawdown. It is a market drawdown for the speculative names that are out there, which a lot of people are selling and saying, you know what, I'm going to go into the safer names and I'm going to go into other things. So the question here, and that every investor has to ask themselves, let me look at my portfolio, see if I have any junk that I bought as a speculative move and whether I want to be in the speculative move going forward. If you have a bunch of ionic Qs run around in your portfolio and that's been your greatest winners, it might not be a bad idea to, take some chips off the top while you still have some chips, So.
I mean,
trying to make those run all the way till a year and a day, though, Chris. Trying to make them run till a long
That's what
time.
I'm saying. Like, dude, if your investment thesis is I'm gonna ride this horse until it's about to buck me off, bro, the bucking has started. So you best like high class your portfolio now rather than later. Because I'm seeing a lot of people losing confidence in these names. So,
but Chris, does that speculative stuff? Go ahead, Doug. Oh, but Chris, does some of that froth getting cleaned up around the edges and quality not getting as hard, getting hit as hard? Like, doesn't that lead you to believe that it's not actually a cracking of the thesis? Because names like Google and Amazon, yeah, they traded down a little bit, but they didn't get crushed. The companies that are showing the earnings growth are still doing good.
But that's exactly what I just said, right? Like if you're holding Google, Amazon, today is just a normal day for you. It's not a big deal. If you're holding the junk, then yeah, today you're feeling a lot of pain, right? So that's the thing. Even the crypto names, if you're holding a bunch of crypto names right now, crypto got hit. Like I have BMNR, I got hit by it. But
do you think BMNR is junk now, or do you think?
No, it's speculative. And so what's going to happen is look, if you are in any crypto plays, you best be ready for volatility, because when things go like risk off, you're getting sold off. When things go risk on, you're going to get bought up. Now, here's the thing. I think that there's actually a fundamental thesis to BMNR. I don't think it's just a junk company. I think it's very similar to MSTR in that they do have a plan going forward, right? And the underlying business is not just, hey, listen, we're going to do this one thing that's a loss maker for the rest of our existence. There actually is hard assets. Well, technically not hard, but there's assets underlying the company, right? So at some point, Ethereum, in my opinion, is gonna bounce back, and BMNR will bounce back. Unlike what is that thing called? Like Ionic Q that's running cash flow negative, has no plans to make any money for the next 10 years, that are more likely to go to zero than actually have retained some value.
To your point, Beyond Meat getting to $8 and a cult forming around it, I mean, yeah, that was froth, obvious froth. And so that getting wiped out is not the worst thing.
Can you have a bull market without some level of froth, though?
I mean, historically, no, right? We've always had a bull market with some froth. But as long as that froth is wiped out and Amazon's not wiped out with it, because eventually that froth money goes back into something safe, which is why this is all relatively not that big of a deal. Although it hurts all of our portfolios, seeing the draw. Like, I think all of us would agree what we've seen over the past couple of weeks is not.
Here's a good question. Someone said MSTR is down 42% while Bitcoin is only down 6%. Well, here's the thing. MSTR was trading at 2 times NAV, which means that it was crazy overvalued relative to the assets on the balance sheet. You can't say I have $1 in my bank, but my company is worth $2 when you don't generate any additional income. It's simple, right? All of a sudden now people are just saying, listen, you're not a $2 company, you're a $1 company, so your stock got re-rated down. That's the exact play that Chanos did. Chanos said, I sold short MSTR and I bought Bitcoin with it. So Bitcoin went down 6%, MSTR went down 40%. He collected a nice 34% return. And he was covered on the upside, covered on the downside.
And at some point, we have to normalize valuations and actually not allow, or maybe not say not allow, but at some point, companies that are pre-revenue or generating revenue but still losing money should not trade at 100 billion valuations or 50 billion valuations. Like, it's crazy.
I agree.
It's absolutely crazy that we have companies that lose money that are larger than companies that generate a couple of billion in pure profit. It's insanity.
Yeah. And just to revisit Chris's MicroStrategy point, didn't it inverse that on the way up? You know, Bitcoin went up 60% and MSTR went up 4 times or something.
100%. Good point, Doug. There you go.
So if it does
That's
the
how
same
leverage
thing,
works.
if it does the same thing on the downside, that doesn't mean it's crap. It just means it's
Yeah.
behaving the way it behaves.
Leverage cuts
And
both
you-
ways.
Yeah, and you should know what you're buying.
So we have a good question here, and I actually did not hear what Lisa Su said. So can you please discuss what Lisa Su said 2 days ago? Quote, a lot of customers over the last 12 months are finding out they're at an inflection point from their AI investment. FYI, Meta is a larger consumer. Did anybody listen to the interview with Lisa Su with this?
Basically, Lisa Su is saying that customers are seeing the productivity margin efficiencies from buying the chips. And that's why Meta is going to keep buying the chips, which is why they're guiding for the revenues the way they're guiding. It's bullish. Basically, every update I heard from AMD that is super bullish on this overall AI trade, which again is like the only way this is .com bubble outside of the Fed hiking, which by the way, the .com bubble burst when the Fed was hiking. I don't think J Powell's hiking next year. The only other way is that if all this stuff is fake, if every margin efficiency, productivity gain, Chris's videos of podcasts turning into 7-minute videos, if all of that doesn't matter and the GPUs are worthless, then all of this falls apart. If it does, then we're going to have ups and downs, but it doesn't mean structurally this is blown up in any way.
Yeah, I'm just not seeing that this is fake when you look at the year over year and quarter over quarter increases in cloud services and then what the backlog is. It's real. Now, you may disagree with what the use cases are, but when you look at the numbers out of Gemini and Azure, it's pretty bullish for use cases. So I still think that there's several years for this to play out. It's just a matter of when do we go into maintenance mode versus expansion mode. And there's no signs we're going into expansion mode over the next year or two.
Steve, I still
I'm
don't.
sorry, maintenance mode over the next year or two.
I still don't see it being used anywhere at work. If you like, we're being encouraged to use it, and you know where I work, okay? And I work at the corporate headquarters.
Yeah, we're not going to say any. Yeah.
I'm not like a guy wearing FRCs in the field anymore, but a major energy company, okay? We're being encouraged to use it, but you can only use it to like help you write an email or make a PowerPoint presentation. If you have 300 engineering reports you need to read, summarize, find the things that need to be fixed, and send those to maintenance, no, you're still doing all that by hand. You got to do engineering calculations to determine the required minimum thicknesses for this or that pipeline or pressure vessel to make sure the oil stays inside. You still got to do all that by hand, or maybe you make a spreadsheet to help you with it, but you cannot use AI for that. So either that shows that we're just getting started and we're not even using AI to do computing things that computers should do, or these large corporations are never going to allow an LLM, which can hallucinate and tell you whatever you want to hear, that you can. Sorry, I'm got
No,
on my rant there. They're never going to let you use it for something that they could be held liable for, because we don't know who's ultimately liable if the LLM gives you a bad engineering calculation and you use that in a bridge or in a refinery or a tank farm, and there's deaths and blah, 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 and a massive catastrophe. And it all comes back to, well, the LLM gave the wrong answer.
There's definitely compliance that goes along with it. There's no question about that. So let's look at it a little bit differently. I'm going to read you some stats, and I get it because a lot of companies are the same way. I'm going to read you some stats and then extrapolate a little bit. So this is just from Alphabet's Q3 earnings. So Gemini models are processing 7 billion tokens per minute. The app, Gemini, has over 650 million monthly active users. Not just users, but active. AI mode has over 75 million daily active users in the US alone. AI overviews are now scaled to over 2 billion users. Google Cloud generative AI models grew more than 200% year over year in Q3. And then Gemini Enterprise secured 2 million subscribers across 700 companies. So where I am looking at this as, it's probably more at this point on an individual side when you look at LLMs and on a corporate side for compliance reasons and other areas. But I do believe a lot of SaaS products, and we're not going to name any names, people can figure them out for ERPs and HCMs, but they're embedding LLMs inside to help their products be more efficient. So I think that we're going to see it inside of certain products. And Doug, I'll put the ones in the private chat. I just don't want to call any out that I'm talking about, because I'm sure you use one of them the same way that I do. So just look at private chat real quick. So I think that I know that they're building inside of those. And I think that that's where we're going to see a lot of productivity come from it. Accounting, finance, HR, learning, that type of thing. And then I think what we will see eventually, and this is just my take from a compliance side, we're going to see companies piggyback off of either an Alphabet and OpenAI and build a proprietary one that meets their compliance standard that's not open to the more like a notebook LM, where it is only utilizing the data you feed into it. It's not going out into the web and pulling anything. So I think we're still at the beginning of this.
Well, I think Austin, go ahead.
I was going to revisit Dougie's point about, having almost sort of a final write-off before you actually submit the work. So even though, you don't want to just feed something into an AI and then be like, oh yeah, done, check the box and move on. You're still going to have, humans actually going through and overlooking everything to take the liability for it. So a good example is Harvey AI. I've got a lawyer friend. He has the AI do a lot of the grunt work, but at the end of the day, it's still the lawyer's responsibility to actually go through, double check the quality of the work, and it's their license that's at risk. Another good example is call reviews in inbound customer service centers. You can have an AI actually go through and voice detect, frustrated tones, and that gives managers a good starting point to do call reviews to see where the interactions could be improved. But it's not really practical for someone to go through and listen to every single phone call, but having the AI detect where there might be hiccups and problems and frustration, that's a huge productivity boost. So there's all sorts of ways that you can utilize this stuff that doesn't necessarily just like hand off the work with no monitoring.
Yeah, I agree. And I think a lot of people agree with what you are saying, which is the question is, who is ready to go net short on this market? And I think for all the people on Twitter that are posting that the cycle has peaked, it's a top, it's like, well, who's actually going short? Now that Burry is done with his fund, he technically could do whatever he wants, and maybe he's super net short because he doesn't have to disclose it anymore. But I don't think there's enough people with the confidence to say all of this is going to collapse.
So you guys know who Barry Sternlich is, correct? I know Chris does. Amit knows because we've talked about it a ton. Dougie and Austin, do you know who Barry Sternlich is?
I don't. If you start talking about him, I might.
He is the CEO and chairman of Starwood Property Trust. He's a big real estate mogul. And
okay, I know Starwood.
Yeah, so he did an interview. He owns W Hotels, all that stuff. So there was a podcast on CNBC television called Property Play, and he actually discussed AI because they're doing a huge funding round for data centers. And what he discussed is going on with his companies and the amount of people that he is going to have to ultimately let go because of productivity gains, especially in call centers and other things, is very interesting. It's somewhat of a long interview. I'm not going to play the segment right now, but I am going to link it, and I'll put a timestamp. So if anybody wants to watch it, it's definitely worth the 5 or 6 minutes. It's very insightful.
I think AI is very real. The use cases are very real. I use AI for certain things, but I also know the limitations of AI, and it's, in my opinion, AI is one of those things that can help you get to a conclusion, but it can also draw in a lot of biases. So you have to at least get to a point where you know the subject matter at least at a level where you can challenge the AI if you need to. One of the challenges that I see going forward, like long term, is too many people are utilizing the AI as the default answer machine. The one thing I honestly hate is when I post something on Twitter and everyone's like, Grok, what do you think? Grok, can you explain this? And I'm like, bro, it was like one sentence and it's very clear what I was saying, but apparently they need everything to go through the lens of AI in order to help them understand the most basic things. So I think that's a challenge, but that's a private conversation, whatever. The point is, I don't think that AI is a bubble just yet. I do think that there are pockets of bubbles forming around business models that are not going to survive what's coming. Now, what does that mean? That means that if you go to like even the dot-com bubble, because the dot-com bubble is a great way to explain this. Among the dot-com bubble was Microsoft. Among the dot-com bubble was Amazon. Among the dot-com bubble was Cisco. All of these great companies were in the dot-com bubble who were positively impacted and negatively impacted, but they had real underlying businesses that survived the test of time. It is the same thing that's going to happen with NVIDIA. So if you're trying to short the AI bubble by shorting NVIDIA, I don't know that that's really the way that you want to go. Instead, you could short the fringes where you know the business models are complete trash and basically make money on the AI bubble with that happening. But you're not going to take the market leader in AI and short them and think that that's something where you have real value. So for me, if you were to say, Chris, do you think that there's an AI bubble? I think that there's an AI infrastructure bubble where there's a lot of companies that are pretending to be AI infrastructure players where instead they're just a bunch of GPU offloaders, where all of these hyperscalers like Google, Microsoft, and Amazon, they're just like, well, we don't want to take the risk. So let's kind of like shift the risk onto these guys, pay them a little bit of money. They sell everything to shareholders. And like, did you guys see the interview with Satya Nadella where he basically confirmed that? Like, it's so obvious that that is not where you want to be in the market. But when these deals are announced, Microsoft signs a $5 billion deal with this data center. And I'm like, this is exactly what happened to commercial real estate, if you guys remember, where all of these big companies, they sign deals. Oh, we're going to lease this commercial space. What happened post-COVID? They didn't need that commercial space. What did they do? They said, here's your breakup fee. Have a great day. And now all these commercial buildings are sitting there empty with no one to rent them out. And I don't know, it's not a good look on. That's what commercial real estate is going down. So I think it's the same thing with the data centers thing too, where Microsoft, Amazon, Google.
I do think the difference here though is that there is way more demand than there is capacity, which is why these neo clouds are popping up. Now that doesn't mean all the valuations on them are justified, but I don't think they're going to be empty buildings with office space waiting to be, unless there's no ROI from AI, unless there's no use case for it. But if there's a use case, there's not enough compute. And Elon and Altman have both said, Elon's talking about building his own chip farm because there's not enough compute.
Well, that's the thing for now, right? Everything is always for now.
So when do you think we all wake up and said, oh, we have enough compute? Because it seems if AMD is going to CAGR 35% next it seems like till 2030, this build out is taking place.
Yeah,
I mean,
Chris, before Chris responds, I wanted to challenge him on this as well. And I do want to hear his answer to this. So, and this is the case Jensen constantly makes, is that it's not that the chips are faster, it's that they're more power efficient. It's that it costs less to operate them. So at what point does having a less expensive operation for the same output or better output, all of a sudden you're at capacity and you don't need cheaper or more efficiency out of your data center?
Well, that's the thing, right? If you look at like some people are saying, well, look at these chips from 5 years ago. The utilization rate is still 100%. Like we're still getting demand. But if you look at the price of the compute per hour, it's like $1. And electricity is costing them like 60 to 80 cents an hour. So the efficiency is less than 20%. Now, here's the thing. If you get a new Blackwell chip, those are making $8 to $9 an hour for the data center. So what's going to end up happening is all of these giant hyperscalers, they're letting these little niche players get this business for now. They're like, okay, look, here's old GPUs, make it work, let the infrastructure do its thing, and we will get the newer stuff. And then once the newer stuff is depreciated by us, where it doesn't make as much sense, we'll give it to you guys. We'll shift it over to you guys again. And literally, this is the cycle that's being played. I think that's one of those things that that we're gonna have to watch out for, because at some point, the value of the electricity that you're putting in is not going to justify the amount of money you're getting to rent. Right now, there's still enough of a margin to support that business model, but at some point, that business model is going to go where it's going to be the cost of electricity is more than the cost of running this old GPU.
Right.
No,
so that's going to force an upgrade, right? So that creates more demand on chips, not less.
No, but that's what I'm saying. That's newer chips, though, right? That's newer chips, not the older generation chips. Right. So that's my whole point.
No, but that's still demand but that's still demand for the data center. So I shared your opinion for the past couple months that these neo clouds, the unit economics on them aren't that good. And I think that's still a fair point. And you could say the valuations aren't the best either. I think some of them are relatively cheaper than the other ones. But then when you look at the demand backlog, and Steve says it's 1989. I don't know if it's 96 or 1989, but if you think it's at least 4 to 5 more years on the build out, even if these neo clouds are just trades for you don't want to hold it forever like Amazon, there is not enough capacity for compute. And so even when there is Vera Rubin and we get an upgrade, those neo clouds are going to have more demand to implement those GPUs in their data center space, even if they take out the.
By the way, can we stop utilizing the drug dealers business? Like, you can't ask the drug dealer, hey, how's business going? They're going to say, yeah, business is going good. Like, you can't ask Jensen, hey, what do you think about demand? You think it's slowing down? You think he's going to tell you, yeah, man, I think demand is actually.
You can't use that analogy. That analogy doesn't make sense to me, because if you look at the numbers, Jensen can say whatever the hell he wants. The numbers are the numbers.
I mean,
the numbers are insane.
CoreWeave posted a 55 billion backlog. That's in addition to all the backlog from Alphabet, Microsoft, and Amazon. So I don't follow that. I start following CoreWeave.
But Steve, that's like saying I signed a lease to a building for 20 years. That means my backlog is rent for the next 20 years. What happens when you have a lease termination?
No. So that's a different question. The neo clouds, CoreWeave doesn't work if you think a Microsoft doesn't need as much, or a Meta, they have a $14 billion worth of it, doesn't need that much capacity, and so Meta cancels the deal. But if we believe in AI, then they should need that.
But Zuck has even said that on his last earnings call. I mean, you guys remember, we spoke about it. Zuck said, we're building out right now because we're not trying to get left behind. If at any point we feel like, hey, we have enough compute, we just won't get any more, and we'll just use the existing compute that we have. Right.
But that's my point. That's where as an investor, that's where as an investor, you have to ask, do you think AI is real? Because you're 100%. If you think Zuck's is not going to find a use case for this, or Nadella or Sundar, you get the hell out of all these plays. But if they find a use case, there is not enough capacity, which is why I think there is a bid that inevitably gets put on all these things.
Keep in mind, Zuck has much different needs than the other three. He's not running a cloud service business. Now,
which I think is going to change eventually.
It may, but let's stay with what he's doing now, because he hasn't said that he is or he isn't. But I agree that could be a vertical he goes into. If Zuck decides not to go into that vertical and decides that they have what they need to focus on their advertising businesses and whatever they're going to do with wearables, that has nothing to do with the other three, because there's $700 billion in cloud backlog. That's companies like the companies we all work for needing more cloud services from them. So until that backlog gets down to nothing and there's no more backlog, they still need more compute than they have because they can't fulfill it. So the question really is, how long until all the backlog is utilized? And when do companies stop needing additional compute?
And that might happen. That might happen in a couple of years. And let's say that happens in 2028, if we're being super bearish. And then the stock starts to correct at the end of 2026 because the market is forward looking. And so the question then becomes, when do you get out? But if that doesn't happen until 2031 and the stock doesn't start correcting until late 2027 to pull that forward, you've got 3 to 4 years theoretically of this going on. It's a gamble though if you want to take that bet.
And guess what happens when they pull back? Amazon, Alphabet, and Microsoft aren't getting screwed. Their free cash flow spikes overnight. Well, over the next quarter. So this is a game of, and nobody can answer this because none of us have a crystal ball. I wish we did. This becomes a game of when do they have enough compute? And it becomes the prisoner's dilemma that I've been speaking about for the past year. None of them can take their foot off the gas until they all do, because they all have to be right. Otherwise, the ones that take their foot off the gas, if they're wrong, they fall behind the others. So this is going to be something that's collectively done. It could be 1 year, it could be 5 years. We have no clue, but we're also not taking into consideration the amount of compute that's going to be needed for the robotic revolution that's going to happen and the full self-driving revolution that's going to happen. Those are going to need dramatic compute, and the robot revolution is going to happen.
My thing is, if you really believe that and you still want to be in a nice mega cap, then just chill with Apple. I mean, Apple's at 36 PE, but at least you know that they're not spending a whole bunch of free cash flow on something that may not pan out. You know, they're still there. I mean, that's why today you saw this market sell-off. Apple was down barely a percentage point.
See my company, Cisco? Cisco was up 5%.
Was up. That's because they had amazing earnings.
Buying yesterday because of that, Steve. That Finance Junkie episode you did,
years ago,
3 years ago now, where you pitched blah, 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 and then you said what it was. I remember I was walking my dog outside, and I was like mind blown. I almost went and bought a whole bunch of Cisco the next day.
Dude, Cisco is one of the most underrated freaking companies. It still is one of the most underrated companies. And it's amazing that for years, people have not put two and two together that when you add data centers, you need networking. When you add office space, you need networking. You can't run these servers and these racks without switches and firewalls. You just can't do it. And Cisco is now a hybrid company where it's not just networking equipment. It sells security products, and all the networking equipment has subscription models behind them. So it's just amazing it got as low as it is. And even where it is now is still trading at under a 20 PE for this year. It's crazy.
Austin, go ahead.
I guess I'm trying to really understand, Chris, your position. So is it that you think that there's going to be like a chip glut at some point, like an oversupply, or is it more that there's going to be a backlog that eventually dries up, or maybe a third option where like a technological improvement that allows more tokens to be generated at a rapid pace clears the backlog, and then there's nothing at the end of the rainbow?
It could be all three. That's the thing. That's the risk. Each one of those scenarios that you just pointed out carries its own set of risks, right? So if you think,
but Chris, do you realistically think those could happen? Those scenarios, like, do you put a high probability on those things?
No, but I mean, it's a risk. But it's a risk worth keeping an eye on, right? I'm not saying like, listen, whenever you're investing, you have to lay in all the positives, but then you have to lay in all the negatives too. Like, what are some of the risks? I mean, you've got to do a SWOT analysis and just say, okay, what is the moat around this company, and what can come around that destroys this moat tomorrow morning, right? So right now, a lot of people, like I said, anytime I ask them about the investment thesis on a lot of these companies, it's, I'm going to get out at the top, because even they don't believe that this is a durable business model for infinite level of growth for the next 50 years. You know, even the most hardcore AI people are saying like, look, I think the build out might be a little bit long in the tooth, and that eventually that capacity will reach a point where it's more like maintenance instead of growth. And if your valuation is built on nonstop growth for the next 10 years, then it's not really a company that you want to be in, right? Like, here's an example. Everyone knew that Tesla was going to be a great company in 2020, right? People bought that thing at $450 a share at the time. What did they do? Eventually, Tesla did catch up to the demand, but they bought that, literally that cash flow way into the future, and then they broke even 5 years later. So it could be very similar to that with a lot of companies, where what you're doing essentially is buying something with the expectation that this is going to grow at 35% year over year for the next 5 years. So my thing is, that's fine if you think that they can execute at that level, but just make sure that you're not positioning your portfolio to be fully into that thesis. Have some safety as well, at least, especially if you've done well in some of these names, bro, buy some protection just in case some BS happens, in which case the entire general market takes a dump. Because I can't, there could be another DeepSeek moment. You don't know. I don't know. A lot of what Jensen is saying, all these guys say, they're of course going to talk their book. There's nothing wrong with a CEO talking their book. Have you ever seen a CEO outside of Elon saying, you know what, don't buy our stock, I think we're overvalued right now? No, because the board would replace his ass in a heartbeat.
That's true. That's true. You're not wrong. Look, I agree with you. I think I don't know if any of these AI names, whether it's the neoclouds, whether it's even AMD, NVIDIA, et cetera, are meant to be held forever. Like, I think Amazon can be held forever. I don't know if NVIDIA can be held forever. I mean, like, at some point, the GPU sales probably stop. But the point is, over the next 5 years, to make it simple, a 5-year trajectory, do we think these trades, plays, whatever, are going to be more valuable than they are today? Because I would say today we're, a year into a real build-out, so maybe a year and a half. I mean, you either believe that or you don't. And if you don't believe that, then you don't believe the AMD revenue numbers. You don't believe NVIDIA can get to 10 trillion. You don't believe NVIDIA should be anywhere near 5 trillion. You go on and just, you get out of these plays and you get into safety, as you said. And there should be a balance between both. But I think right now, based on the numbers we're seeing, it really does feel like there's runway minimum for the next 2 to 3 years, probably the next 5 years if the numbers really manifest themselves. And as Steve said, humanoid, robotics, drive, if all of that compute is needed, it seems like these are going to be plays that have the demand. I don't know what their stocks do, but theoretically they should be more valuable.
Has anybody seen any? Sorry, Chris. Has anybody seen related to the next couple of years and what we've seen already? Has anybody seen shovels actually turning over, dirt being moved, like buildings actually being produced? I haven't seen any of the companies that would actually be doing that work. I haven't seen any, earnings reports or any of those public companies having blowout quarters because, we just had to build, 4, X billion-dollar data centers.
Amazon's Project Rainer that they just built. They're also building. They're building another one adjacent to it. So they just finished that. I'll send you the video, but I get what you're saying.
There's a couple there.
Doug, you're talking about the Bitcoin miners, all of them that are up like 1,000%. All of them have all this land. That's what you're talking about, right? Turning a facility into an AI HPC play. I would just say it's the Bitcoin miners.
Yeah. So the Bitcoin miners have a whole bunch of ASICs. So what good does that do anybody?
Well, they own the land and they've got the power, so it's plug and play is the idea. So that's why they've run so much. But another thing that's done really well is the electrician groups. So you can Google a list of some of the biggest companies that have the most certified electricians in the company. Then take a look at their stock chart and their income statements. The proof is there on that side, Doug. But I think some people underestimate what can happen in 10 years. They call this Gates law. You overestimate what can be done in 1 year, and then the progress that can actually happen over a long period of time. So I think if people are looking at where's the ROI, even though we're 2 months or 2 years into this build out, you just have to think in decades, not necessarily months. As they should call it Doug's law, because I hear him say this all the time. This is the worst AI will ever be. I hear him say it all the time, and it's 100% true. It's only going to get better from here.
Bro, I think it's really important to step back, right? I know a lot of us here aren't the biggest fans of Sam Altman, but I also think we got to listen to what he's saying. He's contracting $1.5 trillion of compute right now. Elon's talking about building his own chip farm. Like, maybe the numbers are off, and maybe they're off by a couple $100 billion, maybe they're off by $1 trillion, who knows? But like, the fact that the ambitions are this high because they believe this is the opportunity. I mean, it's not even just a social experiment. It is a health of the American 401k experiment. If this doesn't work in the next 5 years and all of it goes to shit, I mean, we're talking about .com crash, NASDAQ's down 80%. what is going to happen to this country? What is going to happen to everyone's 401k? What is going to happen to the people that are close to retirement that at the end of the day, they've seen gains over the past 3 years and they were thinking of how they were going to live their life in retirement, maybe not be super luxurious, but they're thinking like, hey, I've got some good gain. And then all that dissipates. Like, it has become too big to fail. I hope it doesn't fail. And the ambitions that all these tech leaders are putting out, I think we have to take it seriously. Will it fail? No one knows. But if it doesn't fail, then it's going to change everything. And if it does fail, it will destroy the country, in my opinion.
Well, what's the definition of failing?
Like
Because
if it's a
keep in mind-
NASDAQ fell 80% in the dot-com bubble. If that happens, because if the NASDAQ's only hyped up on AI and that happens again, forget 80%, let's say it's 50%. I mean, I don't know.
I don't think.
Yeah,
I don't
but
think that's
play it out. If the demand for chips goes away, let's just say demand for chips goes away next year. Let's say the build out's over. How does that negatively impact anybody in the Mag 7 except for NVIDIA?
No, I think
That's the point. It's not.
Like, it's not
no, but
impacting any of their profitability.
No, but then the whole reason this bull market started at the launch of ChatGPT was because there was this revolutionary new technology that was going to change everything. If that technology isn't real, then what is the market hyped up?
We're already seeing the advancements in Microsoft. We're seeing the advancements in Alphabet and Amazon. Think about all the things that their cloud services are able to do today that they couldn't do in 2023. So if the build out stops, but I'm getting there. If the build out stops and the capital stops going to NVIDIA on an expansion and it goes into just maintenance mode, these companies are still going to monetize all their assets and grow earnings. Now, NVIDIA may not be growing their earnings at the same rate. They may be at a standstill and have to pull an Apple and just buy back a ridiculous amount of shares and live off of chips that have to be replaced. But these other companies, they're still firing on all cylinders and they're still monetizing. And they won't have to spend as much. Their free cash flow expands. They go into buyback mode again instead of CapEx mode.
You're right about that, but I think the general excitement to even care about the markets dies down significantly. Again, Oracle, AMD, all these market caps are propped up because of these deals that Elon, Sam Altman, Samsung are laying out.
But the two companies but think about it, the two companies you just said, how much of the S&P do they account for? Oracle and AMD versus these other ones. I mean, there's a difference between excitement and profitability.
I think
that's fair.
This is something to take a look at when we think about froth in this market. If you see how much of the S&P 500 right now is just 7 companies, it's close to 50%, right? So do I think that Amazon, Microsoft, Google are going down 50%? Hell no, not even possible. Not in my opinion. At the same time, you have all these other companies within the market. There's literally 463 other companies that are becoming more efficient, that are gaining profitability because of all these AI products that's out there. Right. At the same time, you also have Fed rate cuts, which are going to expand their margins. So if you're telling me, hey, I think the big crash is coming in 2026, I don't think so. Not with rate cuts that are coming in. Which we're more likely to see is a broadening out of the rally with money that's saying, you know what, I don't want to be 100% in all the AI plays. I'm going to go into other things. Think about what Doug just said today. Right? He's an investor. He said, you know what? I don't want my entire portfolio to be nothing but AI. I want it to be in some other names as well. So that is what we saw today. We saw rotation, which is healthy. That's a market rotation. We did not. So
Chris, let me ask you this, and I agree that's healthy. Let's say Steve is right and chip demand tomorrow is 0. What do you think happens to the NASDAQ?
Chip demand is never going to be 0.
No, I agree. It's not. I agree with you. I'm saying the thought experiment. What if it does? What if it is a .com type of scenario where we overbuilt way too much fiber optics? All this.
The challenge is not that we have a .com bubble scenario. That's the one major difference between .com and us right now is that most of the companies, as Steven so eloquently put it right before this, most of the companies that are financing the build out right now are cash flowing businesses. They actually have real business models underlying them. And And the companies that could theoretically go to zero or, you know, have a 90% correction are the companies that are so insignificant, that are so on the fringes, it's not going to do anything to the overall market, right? The other thing is the rest of the world hasn't even started to participate in a lot of this upside when it comes to the AI and everything else. So there's still going to be demand. It's just what you're going to see is compression of the multiple in the AI leaders, where instead of companies like NVIDIA getting a 50 multiple, they're just going to retrace down to a 20 multiple, which is not a growth multiple anymore. That's more like a maintenance multiple, especially if they have a lot of free cash flow. They're going to keep buying back shares, in which that's going to prop up the stock price. But you're just not going to see NVIDIA go to $1,000 overnight again, at least not for a long time.
I think it's a good point. Basically, you're saying there is a very low chance of a dot-com bubble. There could be a compression in the chip plays, but that would not lead, and that's a really good point, that would not lead to the overall like 80% drawdown we saw in 02
No.
in the other players.
02 was completely different in that most of these companies weren't even generating any money. They were literally burning cash on nothing. Like pets.com had no product, no nothing, and they were getting millions upon millions of dollars. And sometimes their valuations were in the billions of dollars range. So if you were to ask me, Chris, what's the scenario that happens here? I think, let's say AI, the demand for AI starts to get challenged a little bit. What you're going to see is a re-rating of some of these companies down to multiples that are already existing right now. Technically, as Steve put up right there, if you look at the multiples on most of these companies, they're okay. Like, I think NVIDIA's multiple could go down to like 22, 23. Is that really that bad for the entire market? Not really. That money is just going to flow into other parts of the economy that are not getting as much love.
Well, I agree, but I don't know if NVIDIA's multiple gets cut in half. I'm not sure if it just flows into other companies, even though technically you're right.
Let's leave NVIDIA off of this for a moment, okay? Amazon, Microsoft, Alphabet, and Apple are all generating more than 130 billion in EBITDA. Anybody who says that this is like .com is just simply incorrect, because in the .com era, we did not have the .com infrastructure funded predominantly by these companies that are putting up these numbers. We've never seen these types of numbers before. Alphabet's put up 151 billion in cash from operations, and you have another company, Meta. So you now have 5 of these companies doing more than 100 billion in cash from operations on a TTM basis. So there's a lot of capital being made, and these companies are likely to keep expanding and monetizing their assets. So I'm not really worried about it. I'm really not.
So do you guys here, and this is a history lesson, do you guys know what popped the .com bubble?
I do, but I'll save mine for last.
Anyone?
I was there.
Okay, so what popped it? What was the trigger?
Well, one thing was the Fed raising rates, but I'm sure there's something else you're talking about.
No, it was
That's
not.
what I was going to go with. 6 rate hikes.
Nope. VCs, they stopped putting money into the .coms. And you know why they stopped putting monies into the .coms?
They ran out of money to put into .coms.
No. They still had money. They just lost it. Remember, investors are always throwing money at things that are complete trash. No, it's the lack of confidence and the ability to throw money at trash that causes the bubbles to pop. The challenge is there was one company, and I don't know if you guys remember, which company was the exact top of the bubble that popped. Steven is like just giddy. Go ahead, Steven. Tell him.
You're muted, Steve.
I want somebody to guess because it's just.
Hey, I was working for one. It might not be the one you're thinking of, but I was working for one for absolutely sure.
Yeah, wait, so Chris, you're saying a VC company, like a startup, basically? That's what you want us to guess?
There was an article in Barron's that came out, and basically MicroStrategy was the one that popped the bubble in 2000.
I forgot. Yeah.
if you guys remember, MicroStrategy came out and it was a real shit show. Barron's had actually said something about it, and boom, everything, like, it was like this moment where everything was revealed, and then every VC LP, they could not raise money anymore for any more startups. And at that point, all the startups were like, hey, we need money to keep going. People were like, nope, we're not putting any more money in. And that's what like destroyed everything. As far as I can tell, Microsoft, Amazon, Google, not a single one of them has said, listen, we're not putting any more money in AI. The day that the day that Microsoft, Google, Meta, Amazon say that, I think we're done with the CapEx, I think we're going to focus on share buybacks, is the day that the bubble pops. But here's the thing. They are so into the system that they will never come out and say that outright. What they're going to do is just level off the demand and the growth in demand. That's it. So,
And keep
The
in mind,
latest thing that's going to happen, Chris, is when they come out and say, "Oh, we're going to concentrate on buybacks," they're going to have a big buyback opportunity the very next day and be able to buy their shares 50% of what they were the day before they announced it.
No, but Chris's point is they won't fall 50%. Chris's point is the market's gonna be like, great, no more freaking NVIDIA tax.
I'll tell you who's going to be buying back their shares. It's going to be Palantir when they're back at $50 again. That's why they're loading up. Look, Palantir keeps growing its cash pile. Okay, why does a company keep growing its cash pile? The reason why is because they know they are overvalued. When they're finally correct, they're going to say, hey guys, now we can start using this cash pile to buy back our own shares. Until then, issue all the shares they want. That's what they're doing. It's so easy to see, but enjoy
I bought
it.
99 shares of Palantir today, and the money I would have spent on the 100th share, I spent on 2 T-shirts.
nice.
Well, but Palantir's not sitting on
Talk to your
CapEx.
friend Eliano, Chris.
So
I don't
before
think
we go to Palantir, if we're
Palantir's
even
not
going to
sitting
go
on
there.
CapEx. They would be the beneficiary of.
By the way, Burry put on puts for Palantir. What was his strike price?
The strike was 50
$50. So I'm just saying,
by next year
day,
too. So but I think he sold it already too.
Hey, Amit, remember when we were 2 years ago when everybody said 50 was horribly overvalued?
Yeah, I remember. I deeply remember. I remember a guy on Twitter went on margin, bought like 5,000 shares at 50. And I was just like, that seemed, he borrowed at 5% for an asset that went up more than 3x. It was a good deal. But yeah.
Well, before we go down the Palantir road, keep in mind with the dot-com bubble that there were 2 things that we did not discuss that absolutely destroyed it. Companies were getting valuations and raising capital off of eyeballs. Because keep in mind, the internet was brand new and nobody wants to address that. Nobody knew what the internet was going to be at that time. Like if you were a teenager or in your 20s or 30s in 96, 97, you still had a 14.4 dial-up modem. You didn't even have a cable modem. And companies were showing metrics about how many visitors their website was getting and what they could monetize the eyeballs for advertising revenue. That didn't mean they would actually be able to sell advertising revenue because it was such a new thing. And that's one of the big reasons why, and then that stemmed aggressive accounting and caused venture capital funds to pile money in. And then when the return wasn't there, the bubble popped. That's not happening with this. And that's why I keep saying, like, the correlation between the two is simply incorrect. You can say all you want that at some point the build out's going to stop, and I'll agree with you. None of us know when the build out's going to stop, and the big difference is this is real profitability fueling this. This isn't venture debt, and that's the biggest difference. Oracle's the only one.
Huge difference. It's a huge difference.
It's a huge difference. Oracle's the only one outside of Meta's latest deal that's actually going to the bond market and issuing debt to build this out. So I'm not seeing, when I look at how profitable these companies are, there's any issue on the debt side or the funding side for this.
Okay. Just to break this down into smaller chunks for folks that might not understand that. For those that don't know, I have a laundromat, right? I bought it with cash. I own every single bit of inventory, all my pieces. The only thing I don't own is my property, and I pay rent for that, and I have a great lease for it. Super low cost. 2 new laundromats just opened up down the road. They're new construction. Those are every bit of $2 million build outs. You know those are financed. Do you know what kind of pricing power I have against those? My wife asked me if I'm worried. I said, I'm not worried at all. We can run our margins down to nothing, and they can't. I can put those companies out of business.
It's a very good point.
Because I have a balance sheet that is a fortress. I have cash, I'm profitable, and I don't owe anyone anything.
Yeah, and that's a great point by Dougie, because if you add up the cash on these companies' balance sheets, I mean, how much cash does Alphabet have just sitting there? 90 billion in current? That's not even long term. So it's a silly thing. Now, at some point, this is going to go into maintenance mode. None of us are going to know it till it happens. And it could be a year, it could be 3 years, it could be 5 years. And I keep changing my target of when it's going to be. But when I look at this, which is very impactful, okay? This is just Amazon, Microsoft, Meta, Alphabet. And when you look at the actual numbers, in 2024, they spent, let me just drag that down. They spent 217 billion in CapEx. It was a 55% year-over-year increase. In the trailing 12, they've spent an additional 52% on CapEx, and they've gone to 329 billion. The expected for 2025, they're expected to spend 354 billion, 63% year-over-year increase from 2024. And they're also expected to grow this past 400 billion next year, maybe closer to 450 based on what they said on their earnings calls. So we know at least at this point, it's not going into maintenance mode next year. Now, 2027 may be a different story, but I'd be willing to bet we got at least another 2 or 3 years left of build out. And then the real $1 million question now is, after the build out happens, what does maintenance mode look like? Does maintenance mode look like they have to maintain this type of spend, or does this type of spend get cut by 30%? Because if this gets cut by 30%, I don't even think that that's bearish for NVIDIA or an AMD, because it is so much money going back into the ecosystem. And then these companies are going to be able to monetize all these assets while depreciating their current inventory off the books. So
basically what I'm hearing from you and Chris, and I think this is a really good point, is, and this is the point to drive home for today. You guys are saying if chip demand went to zero tomorrow, it would affect one major company.
Not to zero. Not to zero.
No, but I'm saying, if we were to go to the logical extreme and or the illogical extreme rather, and because I'm saying, let's steelman the bear's worst case scenario.
Sure.
That chips stop tomorrow. You guys, which I think is a very good point, quite frankly, it's even changing how I'm thinking of this. You guys are saying it would hurt NVIDIA and CoreWeave and AMD, Broadcom. It would really not matter to Google. The sentiment probably would be ugly, and Google's probably down 20% the next day. But at the end of the day, all that money is just going back into the business.
Sentiment would impact everybody short term. But what happens when that next earnings call comes out and Alphabet's profitability and revenue grows quarter over quarter, year over year? Same with Microsoft, same with Amazon, same with Meta. Is they're not freaking making money selling chips?
No, but this is a really good point. So for everyone freaking out about .com bubble collapse, let's go to the worst case scenario. A lot of companies probably get hit bad when the chip demand goes to zero, which is very unlikely to see. But if that does happen, the 7 companies that make up, or the 6 companies that make up the majority of the S&P outside of NVIDIA, they get a ton of more free cash flow, a ton of share buybacks, and they keep the party going.
Yes. And they get bigger margins on free cash flow. They don't skip a beat because nobody's getting rid of their cloud services. And chip demand is not going to go to zero. It's just going to go into maintenance mode. And we have to see what maintenance mode looks like. And look, if we're at a point, think about this. If we're at a point where the last year of build out is 500 billion from these 4 companies of CapEx, and maintenance mode becomes 350, is 350 that crazy of a number that's going to make NVIDIA go to freaking $30 a share? Absolutely not.
Good
NVIDIA
point.
gets hit a little bit. Okay, great. But the rest of the market's going to get a lot of productivity, like Chris said. There'll be a lot of efficiency gain. And ultimately, the biggest companies are still going to improve their bottom line.
And here's the other thing that's really important about this. And this is why when you steelman the bears argument, it's even hard to get to that crazy conclusion. The cloud revenues for Amazon, Microsoft, and Google, which are so lucrative for them, is because of more AI workloads. Like that's really been why Azure is growing 40%, Google's growing 35%, Amazon's now going back to 20%.
Let me add one thing to that for you, Amit. I'm gonna make your point even stronger. Most companies are on enterprise agreements for cloud services. Most companies every year need to get more space. Dougie's shaking his head. Yes, he knows exactly where I'm going with this. If you're on Microsoft, you need more in their environment for SharePoint, and you need more in their environment for OneDrive. Same if you're on Google services, cloud services, you need more for their Drive services. So it's an infinite loop because now companies are not, this is not the 80s and 90s where you need to store things for 7 or 10 years of paper files and you have to outsource it to Iron Mountain because you don't want to store it on site. Now you're able to make digital prints and store something that has a 7 to 10 year retention period. You're able to store it in the cloud because it is acceptable to have a digitized scan. So the space that you need is still increasing.
Yeah, and those AI workloads need data centers and they need chips. Now, here's the actual bear case. I think this is how you get to the conclusion of actually bearishness. What if there is no demand for cloud? AI cloud in particular. What if that goes away? Because there's no quote unquote ROI on AI, right? Like all these companies.
I don't think that that's ever going to be the case.
So if you don't think that's the case, then it's really hard to find that big bad boogeyman bear case. Because if the AI cloud demand is going to be
not that you don't think that there's a case, that's not a case.
Yeah, that's not
like
a case.
if anybody who works for a company that is signed up to these companies, it's not a case. That's not a thing. That's not actually an argument. Anybody who actually thinks that is so misinformed. They should go invest in something else.
Cloud compute is going to CAGR at 15 to 20% per year for at least another decade. Like everyone, there has never been a time in my lifetime where people have said, you know what, we need less cloud services because everything, if you know how much stuff is still on-prem, I think it's still like 70 to 80% of all applications are still on-prem. Okay. Cloud compute is going to have a long tail going forward. AI cloud compute is going to be sold as a side thing. The question is going to be who's going to be the ultimate winners in this. In my opinion, as far as I can tell, Microsoft, Amazon, Google, and if Meta ever decides that, hey, they want to get into the fourth leg of the race, they can get in. IBM could do okay. Oracle will technically do okay, but they also have they have a lot of ambitions to become one of the biggest hyperscalers. So they're another question. But just to be on the safe side, I don't think Amazon, Microsoft, and Google are going anywhere. They're going to do fine. By the way, I just want to show people the article, the exact top for the article right here. This was from wrong screen. 1 second. Let me just show everyone.
Guy can't get his mic on. Now he can't get the right screen going.
I'm sorry.
But Chris, before you bring it up, I think just real quick, this is the biggest takeaway from the show today. If you think chip demand goes to zero tomorrow, NVIDIA, AMD, the neoclouds, they get killed, but everything else should be relatively okay, even if the sentiment goes down because the free cash flow comes back.
After Chris goes through this article, I'm going to bring something up.
Yeah. On the second hand, if you think cloud AI revenue is real, and we can see it in the earnings, all that cloud AI revenue is coming from the chips. So it's like if chip demand goes to zero, okay, bearish NVIDIA, which is very unlikely. If it doesn't go to zero, then all the AI infrastructure is still going to generate a lot of ROI for the clouds, which means it's just unlikely to be .com.
Yeah, I don't think this is not a .com scenario. But at the same time, I do think NVIDIA and possibly AMD are going to get cut. Their multiple is going to get cut down. But at the same time, remember, if they still are able to generate free cash flow, that means that they're not going to go to like a multiple of a 5 or 8 or a 10. They're still going to be at like a 20. You know, so and a 20 multiple is, like I said, from here, if you consider how much EPS growth NVIDIA has over the next couple of years, right? It's not that you're just not going to see tremendous amount of gains from NVIDIA where it goes from a $5 billion company to a $10 trillion company overnight anymore. It just means that it gradually has to work its way into that $5 trillion valuation, especially with autonomous cars and robots and all these other things coming online as well. Just remember, those segments are still very, very, very small compared to their data center exposure. Their data center exposure, I think, is like 90% of their operating profit. So everyone who tells me, oh, but what about robotics? What about autonomous cars? Okay, break out the numbers. Please tell me how much of the AI data center revenue that these other segments can replace. All right, so the point is, this was the article. It's called "Burning Up," warning the internet companies are running out of cash. And this was the major thing. And I think this was the most prescient part of the prescient thing. Pegasus is working with the latest public financial data, December 31st. So the table doesn't reflect the fact that Amazon early this year managed to raise $690 million in issuing convertible bonds. So the first thing is, when companies start issuing convertible bonds, that's a pretty decent size that there's some problems happening, not just convertible bonds, but bonds themselves. So if you start to see the CoreWeaves of the world and the Nebiuses of the world, they start going into the debt markets, that's a problem. Do you know why that's a problem? Because that means that people don't think that their equity is worth buying into. At this point, NVIDIA is still saying, we'll buy equity in your company. But the day that the NVIDIA and all these other guys say that, yo, we're not going to buy any more equity into your company, and they need to raise money for their new round of data centers, that money is going to come from the debt markets. And that's when, in my opinion, we need to be cautious. But basically, the reason why the dot-com bubble popped was because cash ran out. They still, all of these companies, the dot-com companies, they all want, like you can see, the one that they cited was Amazon. Right? Amazon was running out of cash fast. It's not the Amazon business wasn't good. It's just they're losing cash. Which one of these hyperscalers right now, these neo clouds, is cash flow positive right now? Can they support their AI buildouts without infusions from NVIDIA, AMD, or anyone else?
Well, that's how CapEx cycles work, right? You have to invest the money first, and then you see the returns years later. It doesn't pay back right away.
Exactly. But the problem is, if you have a depreciating asset like these GPUs and everything else, what happens when the next cycle of CapEx comes along? Where are you going to get your money?
Well, so you have other infrastructure type companies that do utilize a lot of debt. And quite frankly, I don't see lots of people, throwing their arms up in the air about it. So examples is like GM, Ford, Verizon, right? Like they do have lots of debt.
Yeah, but the problem is their debt, when they buy these assets, they're not depreciating every 3 to 5 years, right? When you have an LNG plant saying, let's take out a $20 billion loan to build out an LNG facility, the depreciation on that thing is 30 years, right? And even after 30 years, it's still generating cash flow. With these GPUs, they depreciate after 3, maybe let's say 5 years. What happens?
Well, so obviously the bearish case is that they're depreciating every 3 to 5 years. But right. If you believe that they're going to have a longer useful life, there's a few other things that you could take into consideration. So the internal use that these companies have for the tokens that they're generating. So better advertising from Google and Meta. That includes YouTube as well for Alphabet. You've got GitHub, Copilot working together. You have AWS essentially giving credits to Anthropic to be able to produce Claude. And they're using all those tools to expand their margins internally and get a higher operating margin. And you can see this reflected in their ROIC as well. So all those companies that are spending lots of money on the CapEx, they're not seeing gross margin degradation, operating margin degradation. Really, the only thing that sticks out in any of the spreadsheets is that free cash flow. And you have to know that, the pot of gold is at the end of the rainbow when you look at what's actually happening with the story that hasn't come to fruition in terms of it's getting there, but it's not paying you dollars today. You're planting a seed essentially, and then they're waiting for the tree to grow.
Yeah, but if the tree dies after 3 years, 5 years, then what's the point? I mean, look.
Oh no, but Chris,
want-
his point is that these neo clouds, if there's 3 to 5 years, like you've got to make up your mind on this. If there's 3 to 5 years of intense demand, those stocks are going higher.
Yeah, but right,
so it's a trade, but it's not a trade that dies tomorrow. If
yeah, but that's not. Demand. But that's my point. If you look at how a banana tree works, if you put a banana in the ground and it grows a tree, you get one fruit selection, and then you got to cut the tree down, right? That is what you're seeing versus something like the hyperscalers. Say that again.
Why do I have to cut the tree down?
Because bananas only grow one time. They only flower one time. You didn't know that?
No, but not when there's a upgrade cycle.
Yeah, but that means that you got to replant banana trees again.
But that's even more demand for the neo clouds. Because
no, that's demand for chips. That's not demand for the neo clouds themselves. And at the same time, you don't know
but that's
actually going to be demand there.
That's demand for compute capacity. And if the neo clouds have to take the chips out and replace the chips, you still need the power, the infrastructure, the electricity, all that stuff to make the chips make sense. Like my point is, if the AI cloud revenues that we just spent 30 minutes professing how amazing they are running on AI workloads and they're running on GPUs and there's massive demand for them, that's why there's a business model for all these other hyper AI HPC plays that are out there.
As far as I can tell right now, if let's say Google, Microsoft, Amazon, all of these guys believed in building out the infrastructure and that was going to somehow support their ROI way into the future, they would have built it out themselves and never got into the neo clouds in the first place.
I agree.
Because they're not about, hey, let's give away margin for free. They just see that this is a much lower ROI business that takes a lot more with a lot less margin. And so, you know what? Some of the excess they can outsource, but at some point they're going to bring a lot of this stuff in-house.
No, 100,000% agreed. The question you said at some point, is that at some point 5 years from now? Because if that's the case, these neo clouds might be up 2-3x.
But that's what I'm trying to say, Amit. If right now the valuation is baked in for the next 5 years to be great for AI, and at any point that the picture does not develop after 2 years, this thing comes down rapidly.
No, but we just spent an hour talking about why the demand is very real. That's what I'm saying. You can't have it both ways.
No, but I'm saying right now, the demand that these guys are projecting out where they need to go is extremely high based on the current valuations on these companies, right? Like when you look at,
if Azure keeps growing at 40% on cloud, they're going to keep.
It's not 40%. It's 15%, 15 to 20%.
No, but Azure specifically is growing 40. The cloud businesses. The point is,
Azure cloud is growing 15 to 20% per year right now.
Okay, so if they keep up, which is incredible from the base they're on, if they keep up that growth rate and there's excess capacity, they're going to need help doing this, even if that's a 3 to 5 year project. And that's why they don't want to build it themselves, which makes sense. But the stocks that they're supporting and giving these deals to, those stocks probably go up if they keep getting that demand.
Yeah, go ahead, Stephen.
I wonder how long I can keep my hand up. So I'm going to help all of you out right now. I have 2 slides that I put together from Q3. Microsoft Cloud revenue for Q3 reached $42.4 billion, 20% year over year. Key driver was Azure and other cloud services, which saw revenue growth accelerate to 40% year over year.
That was my 40% number. Yeah.
Intelligent Cloud division is now operating at $123 billion annual run rate with 13.4 in operating income for the quarter. Google, which we went over before, revenue accelerated and grew 34% year over year. Profitability soared with Google Cloud posting a record of $3.6 billion in operating income, 85% jump from the prior year. Now we go to Amazon and Meta.
No, but Steve, before you continue, because all these cloud numbers everyone knows, the question we're having right here is, does that mean that these cloud numbers you're showing us, is that good for the neo clouds is the question? Or are those in a bubble? I think that's kind of the conversation.
These numbers don't matter for the neo clouds one bit.
No, I think they really do. Because if Azure is growing at 40% year over year, they need to outsource the capacity for the AI workloads that are allowing them to grow like that, which is why they're getting
the numbers that matter for the neo clouds are the backlog for these companies, not these numbers.
Yes.
That's what matters for the neoclouds.
Yeah, but the backlog eventually translates into
right,
revenue.
right. But these numbers support the backlog.
No, I get it. But my point, I think we're mincing words here. My point is if all these cloud divisions keep growing the way they're growing,
Yes, ultimately it is bullish for everybody because you look at Google, backlog grew to 155 billion. Now you go to Amazon, AWS is 132 billion run rate, and operating income was 11.4 billion, and revenue grew 20% year over year to 33 billion. And then Meta, this is a clear use case of AI. AI-driven revenue increased 26.2% year over year. And AI-driven engagement, Reels and AI-driven content discovery engine achieved 50 billion annual run rate. Those Zuck breaks out, and that is a clear use case of AI, showing that even outside of the data centers, AI is real on an enterprise level for things other than business.
So then, Steve, do you think that the cloud divisions of these companies, even Instagram Reels, means they need help? And even like Microsoft doesn't give a shit about building all these data centers, which is why they're giving Nebius $20 billion. But if there's so much demand over the next 5 years, 10 years, 3 years, whatever it is, and they need help, are they going to keep giving the Nebius, the CoreWeaves, the IRENs the deals that they're getting? And if they are,
as long as they need more, they're going to build as much as they need and sub out as many contracts as they need to buy their compute, as long as it works in their profit model.
So then, are those attractive? So
they're subcontractors.
The question,
they're subcontractors. As soon as the demand falls significantly, that the big dogs can handle all of the volume. Either they grow their capacity to handle it, or the demand shrinks, and now it's back in their wheelhouse. All these other companies that were subcontractors, they're going to wither and die on the vine.
And keep in mind, the real question that matters is Nebius and CoreWeave. They can expand their data centers, and Microsoft can keep giving them contracts. They have to tap the debt markets to build out. So the $1 million question is, can they generate enough profitability after that's done to pay back the debt and turn a profit for their shareholders? That's the $1 million question. It's not whether this
or
is
they just get bought by one of these companies later on.
And here's the one thing that I think Nebius has, maybe even CoreWeave to a certain degree, that a lot of these other neoclouds don't. And you know what that is? Their goal, and Nebius is very smart to do this, their goal is not just to be a subcontractor. Their goal is to actually be a cloud provider. So it's not just, hey, we're going to be Amazon's little brother and AWS's little brother or Microsoft's little brother. Their ambition is, we're going to have our own cloud products and services which companies can come to and contract with us. So, and that is smart because that's much higher margin. So unlike the other guys, if you were to tell me Nebius is down 60, 70% because this whole AI cloud data center play got washed up and this thing down, I'll be the first one to buy Nebius hand over fist. But the other ones, like IREN, I mean, I'm not even IREN. Let me just take that back, because IREN does do Bitcoin and all this other stuff. But some of the other ones, like Bitfarms and all this other stuff, I'll stay away from those.
Yeah. I don't think they're investable. I admire them for saying, hey, look, this is an opportunity for us. We need to pivot our entire business right now. That's an amazing executive decision, huge risk taking. They went, paved the path, and then it looks bubble-ish because everybody else followed them. But, you know, leading in that and saying, we've been doing this for years. This is our wheelhouse. We're putting this down and we're going to go do this. That took a lot of guts. And I really commend their executive team for doing that. Will I buy it? Nope.
You're talking about the Bitcoin miners, right, Doug?
Yeah. Nope, not buying it.
Yeah. I mean,
although somebody's got to mine the Bitcoin at some point.
Do we even care about Bitcoin anymore? I mean, like,
no, not really.
Well, I know there's some Bitcoin bears here, but look, I mean, it's not like that is going to zero and that ecosystem is going to stop tomorrow, right? But somebody has to be mining the Bitcoin. I'm been curious about how that is happening, continuing to happen in the background. Are these companies still mining and they're just adding on these additional services?
My understanding is about 95% of IREN's revenue is still Bitcoin related.
So is their net income, I believe. Yeah. Look, I agree with Chris. I think the neo clouds are investable if you think there is a trajectory for demand from the hyperscalers to continue onto the little clouds because they need help because there's just that much demand. And if you think those clouds are diversifying the business model and not taking on as much debt. If they aren't taking on that much debt, they have a diverse business model. It's not just cloud. They're trying to internally build their own things. And the deals they're getting from the hyperscalers are, the trajectory on them is very long. I think they're probably higher in a couple of years. But if not, then they fall back down easily.
So there's one thing that I did a few days ago. I uploaded about maybe like 10, 20 videos and a whole bunch of data on these neo clouds, and I ran it through Notebook LM. I want you guys to watch it, and I think this is a really cool thing to see because I don't know if anyone here in the chat saw the VG thing, but the neo cloud one is actually a really good thesis. Do you want to check it out real quick? It's only a few minutes.
Can we show this?
Yeah. All right. So
Amit, I'm going to look to you. Can we show this?
Yeah. But how long is it?
8 minutes.
Okay. Do we want to sit here and watch
Yeah,
it?
we could. Trust me, it's very eye-opening.
Play 1 minute of it.
I'll leave it to Steve. It's his stream.
You know, the real story, the one that might be even bigger, isn't just about the AI models themselves. It's about the absolute explosion in the digital plumbing that makes it all work. And the companies building this new foundation, well, they're at the center of a really fascinating paradox. To get a sense of just how massive this boom is, just look at this number, almost $1.9 billion. That's the estimated revenue for a single company, CoreWeave, just for 2024. Now, what's truly staggering is that just 2 years ago in 2022, their revenue was only 16 million. That's not just growth, it's like a supernova. And believe me, they are not alone. You know the old saying about a gold rush, right? Don't dig for gold, sell the picks and shovels. Well, that is exactly what these companies, often called neoclouds, are doing. While all the big AI labs get the flashy headlines, the neoclouds are the ones quietly providing the raw horsepower, all those specialized GPUs that makes any of it possible. They are the essential but hidden engines of this whole thing. And here we get to the paradox. For all this incredible, mind-bending growth and all the hype, a really critical question is starting to bubble up. Is this foundation they're building actually solid? Or is this entire multi-billion-dollar industry built on a temporary market fluke that could just vanish as quickly as it appeared? So let's start where these stories always start. Follow the money. This completely unprecedented growth has led to some absolutely sky-high, stratospheric valuations. I mean, the market isn't just pricing these companies as successful businesses, it's pricing them like they're the next generation of untouchable tech giants. Just take a look at these numbers. You've got CoreWeave, Lambda, Crusoe. They're all trading at around 10 to 12 times their annual revenue. Now, in the world of finance, that's what's known as a platform multiple. It's the kind of premium price tag you'd give to a dominant high-margin software company, not a business that has to physically buy billions and billions of dollars worth of hardware. So what's the catch here? What are investors really pouring billions into? Well, they're capital-intensive businesses. They're often still losing money. I mean, CoreWave lost over $800 million in 2024 and is
Chris, can you link this?
And they are dangerously dependent on just one or two massive customers. It really highlights this huge disconnect between.
What did you ask, Stephen?
Is there a way for you to link this video?
Yeah.
Right. Link it in the chat.
Well, I can't. I actually download. I have to actually. This is not on YouTube. This is something that I had to download. So.
Okay.
Upload it to your channel.
Yes. Not the thing is, some of the numbers on here, they're incorrect. See, this is. By the way, if anyone wants to know, this came from AI. Okay, AI did all the work behind this. I did nothing, no graphics, no nothing. I just uploaded a bunch of stuff and said, here you go, AI, create a video that does the explanation on what's going on with the neoclouds. And this was
made on Notebook?
Yeah.
Dude, Notebook LM is amazing.
Yeah. Oh, yeah.
Especially when you pay for the bigger package, it's freaking amazing.
Oh, dude, it does amazing work. The only challenge is it still hallucinates a lot. A lot of the stuff that the core concepts of this video are correct, but there are numbers in there that are not correct because what it did was it used numbers that I fed it, but it looked at the data from 2024 and not 2025.
This is why we need more GPUs. You just made us listen to some shit that's not even right.
I mean, you didn't even get to the core like finished of this thing, but whatever. You know.
So we got
Did you weave in? Did you weave it in?
Huh?
Do you weave it in?
Hey, that's some mid-level humor right there. Y'all should all be cracking up, especially this guy in the top middle.
Love it. All right, so we got 3 questions we need to answer. First one, thank you for the super chat. Does everybody think the market will crash badly next year? Wouldn't Powell being removed in QT ending be bullish? Me personally, I don't believe the market is going to crash next year. I'm not saying that. Amit, what do you think?
No, I don't think we get some 2022 type of year next year.
Chris?
I think we get a V-shaped bottom and recovery like we did this year. So there's going to be a massive volatility spike to the downside. Everything is going to go, oh my God, the world is falling apart, and then we'll recover.
Austin?
I could see some chop. I really like Dan Ives' analogy of being at the party. You're going to have some glass break on the dance floor. Party continues.
I like it. Dougie?
It'll trade sideways, but overall the bull run is still on. All these companies are still making money. Margins are still expanding. And, maybe next year we'll have monetary policy finally coincide with the economic theory of the chief executive and the rest of the treasury. So that might actually work together instead of working at cross purposes.
So
5 of us pretty much agreeing. Pretty great.
Yeah, I see inflation coming down significantly because housing is going to be one of the biggest deflationary things next year. Like, I don't know if you guys are looking at rental data. Rental data is collapsing all over the country right now. Home prices, housing sales data is crashing right now. So, like I said, I think there's going to be a giant re-rating of shelter lower. Shelter, I think right now the current inflation rate is like 3 point something, but it's like backwards looking. If you're looking forwards on a forwards basis, I think we're already at 2% on the shelter, like on a forward basis. So when you look at like shelter month over month.
Assuming Ethereum fulfills its payment rails vision, how much is already priced in today? Speculation on this being achieved drives current speculative value. So why do we presume perpetual upside? Amit?
I don't even hear the question, to be honest. How much is already price speculation on being achieved drives current speculative? I have no idea how much was priced in today, but I would say it's not enough. I mean, Larry Fink is saying $4.5 trillion gets tokenized. Tom Lee is talking about 50% of the entire asset chain that runs on traditional payment rails through Wall Street gets tokenized. Vlad says it takes over the entire system. So I don't know how much is priced in, but I would say it's not enough if you believe that it is going to be bigger in the future.
Yeah, I don't think that we have enough information to make any type of prediction accurately. We need to see what happens with stablecoin and how much utilization there is over the next couple of years. Chris, Austin, or Dougie, you have any feelings on this one?
I think stablecoins, as long as that legislation gets done before the midterms, it's going to be very positive. So I'm in agreement that stablecoins is where you want to look for value, because I think once there are just so many benefits to stablecoins that now it's getting institutional support. And now that you have government institutions lined up behind it, there's big money being spent on the whole ecosystem. Whether you look at Fiserv, you look at JP Morgan Chase. I mean, you got the biggest crypto bear on the entire street, Jamie Dimon, flipping the script. I mean, if that's not any indicator of where we're headed with regards to stablecoins, I don't know what to tell you. I mean, you literally turned Jamie Dimon into a believer. You know, Jamie Dimon is launching his own stablecoin, by the way.
Yeah, that plus Circle was down yesterday, by the way. So,
Austin or Dougie, do you follow Ethereum?
Yes.
How do you feel about this?
Can you share my chart?
Yes, I can.
This should tell you all you need to know, folks. Yes, Ethereum has a whole lot of room to run. Folks who know me know that I believe Bitcoin is king. It's going to be the king for a long time. I know people in the chat and the hosts don't agree with me on that. But any way you look at it, Ethereum is going to recapture some of its value relative to Bitcoin alone. So, and that is not going to be due to Bitcoin dropping down to 60K. So, yeah, Ethereum is not fully priced in. It has a lot of room to run. It has lots of functionality ahead of it with stablecoins and stablecoin legislation. Yes, Solana is going to eat some of that, but Ethereum has its place.
Austin?
As far as adoption, I think we're really, really early on, especially working in financial services. You just don't see it actually being used that much yet. So as far as the priced in part, I think if you get more adoption, I can't see it being priced in already. But that said, I'm kind of neutral on Ethereum itself. I just kind of want to wait and see.
Okay. Chef Mike is with us. Gotta get Chef Mike on with Chef Paul to have a duel of the stakes or something. That would be interesting. Even with the .com bubble, the world still runs online. We don't know how AI will look in the future, but these companies will still be part of it. Agree 100%. And then Carl, thank you very much. 2016 to 2018, Microsoft CapEx up, revenue on invested capital down, scale dollar. Yeah, I mean, we all know how that ended up. So,
Wait, here's the rental data for the shelter thing really quickly. Look at this trajectory. This is from CoStar. Apartment monthly rental prices went from 1.5% to now 0.8%. So literally, we're in massive amounts of deflation going forward, which with regard to shelter. And shelter, I think, is about 30 to 35% of the CPI. So, and by the way, next year, apparently, I didn't know this, but the Trump administration just got a huge infusion of money for ICE and border protection and everything. So they're saying that the ramp up in deportation is actually going to grow next year. I don't know if anyone's heard of that. So you think that we've seen all these deportations now, you just wait until next year. And I know some people are going to say, well, illegals don't buy houses, but they do rent houses from people that own houses. So if all of those people are getting removed, all of these renters are now going to be gone. So either the prices of the rents are going to come down for a lot of property owners, or they're going to put those homes on the market for sale, which is going to increase the amount of active inventory out there. So all of those things are going to add to downward pressure on shelter.
We're already seeing it in my local neighborhood, local zip code. My house has gone down at maybe 30% in the last 9 months. On the, just the Zillow estimates or whatever. And, on the other hand, the county is not reducing the assessment of my home by 30%. That's going to go up 10.
yeah, why would
Because
that?
Yeah.
because they got used to.
So that's something to consider is if we have a real big pullback in housing valuations, then we might see that in local taxes.
See, the
I don't know if
problem
we've
is-
ever seen. Oh, go ahead, Chris.
No, you go ahead, Austin. That's fine.
I don't think we've ever seen quite a unique setup here where you've got lots of people who locked in rates so low, and then you might have this portable mortgage wrench thrown into the situation at the same time as 50-year mortgages. And FHA is, sort of pointing their finger and telling all the builders that they need to build on all these vacant lots, which is going to add to supply. And as Chris, you pointed out, you could have large number of deportations. It's a really interesting soup, and it's kind of hard to see where it all goes.
Yeah, the other thing is a lot of local governments, they've been on a hiring spree for the last 4 or 5 years. So if property assessments go down, remember a lot of localities, they generate at the county level, they generate their revenue from property taxes. So if your budget is based on property taxes from 2-3 years ago when property assessments were 20-30% higher, you got a problem. Now you all of a sudden you've got to lay off staff. Now what does that do? That increases unemployment at the local county and state level, right? which is once again going to slow the economy down. So, like I said, we're in a cycle, I think, of a downward move in inflation. And I think we get massive amounts of disinflation in the next couple of years. I think Stephen Moran is absolutely correct. I think the current governors that are being extra cautious, they're letting their own internal biases guide their cautiousness. Like right now, when Bostic came out, Bostic was like, "Oh yeah, no, I think inflation." And Kashkari came out, and I'm looking at them. I'm like, "Open up Google, just type in, hey, what's going on with unemployment? What's going on with shelter?" You don't need to wait for BLS data, dude. There's so many other sources that you can get data right now to tell you that, hey, inflation is coming down. Yes, are there some short-term spikes because of what we saw with natural gas, but those are like seasonal events, So I don't know. I hope they make the right move and actually cut in December. They really need to cut.
I'll say anecdotally, I've got a house on the market, and with 30-year fixed still at 6%, I've got one person even looking at the house. Okay, and this is Phoenix, so one of the hotter markets. So maybe it's it is an anecdote, so take it for what you will. But I got 6 or 7 offers just from investors that were lowball garbage offers that no one would even take. Title doesn't even transfer. Just one actual family who looked at the house. So it's really, really slow. And I just wonder what happens if you shake the snow globe, what sort of unravels there, especially with the portable mortgages. That's really going to unlock lots of volume in that sector.
So the question is, you can't really do a portable mortgage on a, oh shit, Bitcoin just dropped to 97.
Yeah, Steve, share my screen. That is taking, what's happening? The South Koreans are waking up and they're like, fuck this shit, dude. They are getting out of it.
Why are you using Webull, Amit? Why are you using Webull?
Dude, Legend has crashed 5 times. And I know Chris loves hearing this, right? It crashes almost every day. And I'm just like, I can't keep, and it doesn't show the after hours move. It's the stuff I need them to change. They haven't changed.
You know what doesn't crash? TradingView.
Webull doesn't crash either. Webull always gets updates. It's nice.
Well, the stock crashes.
You didn't have to go there, bro. You didn't have to go there.
Amit, you remember a couple years ago when I was sending you Bitcoin charts on the regular all the time? This was that chart. I honestly haven't pulled this up. Look how well this played out. This orange line was from back then when I was sending you these charts, what was that, 23? Look how well this played out.
No, dude.
So Doug, you just said Bitcoin is king. Are you buying this?
I got to do a little more TA on that, but probably not. RSI is still above 40. Let's wait till it gets to 25.
I should have been buying when you were.
This yellow line right here, it will not go below this number. 66,783. That was the price on election day.
The thing is, Bitcoin is taking everything down with it. I'm looking at everything right now. I don't. Okay, so maybe we should end on.
This is perfect setup, though. I mean, you've seen enough with Jason now on TA. I mean, look, this was a max support. Look at all this chop back here. Okay, it broke that. It broke this support over here. Now it's going to come down. Now we're going to test these levels. We're going to test 85, 70. What's this? Maybe 80-ish, right in here. I mean, we're going to test that, but we're not going below this. But I mean, you're going to keep riding this trend. So, I mean, if you want to sell this trend line, look how far back this trend line goes.
Well, here's the question I think we should end on. What does everyone think happens tomorrow? Obviously, futures are ugly right now, but any predictions on how
Don't look. I'm not looking at my port tomorrow.
I mean, this could be a fake out right now, and then you wake up and pre-market's different, or this shit. Because again, what saved us last Friday was the shutdown headline. That's the only thing that reversed it and gave us a good weekend.
Guess who reports on Wednesday?
NVDA.
That's fair, but
Jensen will save the market.
Well, this headline, I think, if things get bad tomorrow, I am not ruling out a Trump tweet, because if you share my screen right here, New York Times is reporting that Trump is getting ready to seriously lower tariffs on food. Markets actually, this was at 6:05. Markets actually started moving a bit when this headline came out, because there was something good they could latch onto.
Well, crypto didn't like it.
I mean, I don't know what's the catalyst tomorrow to maybe reverse.
There is one thing that I'm super long on in this market, and that is the funniest memes when the market goes down. Check this one out right here. Why did I buy Nebius at 86 in October? Now I'm buying that shit.
1 month later.
No, but that's all of us, bro. That's like legit all of us on these names.
But that's evidence that we're not in a bubble. That's evidence that we're not in a bubble because people are actually reacting correctly to pricing and they're rethinking their thesis and saying, is this a sustainable business model?
So this is what I'm going to say. Today's the 13th, tomorrow's the 14th. Guess what happens over the weekend? You got the 15th. So people are either buying the S&P and total market funds tomorrow or Monday.
That's true.
A lot of money's flowing in. And this is what's crazy. Unless you're retired and you have to pull money out over the next couple of days, you should want the market to freaking dip tomorrow and Monday so you can just buy more in your retirement accounts when you're putting money in. I mean, a couple of days stretch of bad days should not matter to anybody unless you're a day trader.
It shouldn't, but when it drops, that's when people start doubting the entire trajectory of like America.
Yeah, that's people that are not seasoned investors.
Agreed. That's overly dramatic, of course.
One thing I am worried about, Amit, and this actually seems like it might be right up Chris's alley too, is the wealth effect at this time of year. Like people should be going out to eat more. They should be buying gifts and stuff. And maybe the top 25, 30% are going to be fine. Like, my sister and her family, they're going to Disney World for Thanksgiving. They're fine. But, the wealth effect for the average American, is that going to start feeling crunched? Maybe not, because they don't own securities. So maybe they don't care at all. But
look, the big problem right now is who's leveraged and who's not, who has liquidity and who's not. How many people are buying on margin? I mean, I still think there's too many people utilizing margin, and I'll stand by that for a long time.
Well, it's at 1.3 trillion, the debt.
It's crazy. It's crazy. And when you get down days and you're on margin, it makes the effect so much more dramatic. So people who aren't on margin don't care.
Do you think this is Q4 2018 vibes or not like that? Because that's what I've heard. I
have a spicy take here, actually, if you guys want to hear it.
Go for it.
Yeah, go for it.
This is the market pricing in who's the all-in guy, their science nerd? Freeberg. This is them pricing in Freeberg's thesis of socialism coming for America starting to take hold. This is the market saying, wait a minute, we have a giant segment of not just the current population, but the future population that is going to be coming after the way markets have worked. And so Nancy Pelosi resigning, and you can say what you like about her politics or whatever, I think we can all agree she was aligned with capitalists in the market. And she was the last vestige. She's the last Democrat holding the balloon of capitalism, as near as I can tell. So half of the country's leadership is taking a hard turn left towards socialism, and I don't see that pivoting back anytime soon. I mean, the other side is nobody's going back towards the middle here. So I think that is getting priced in when the market is realizing there is a fundamental sea change going on with half the leadership of the country, to the point where they're willing to shut down the government for 40-something days just so that they don't agree on something when it was their budget to begin with.
I'm not sure that an election in a really blue area like New York City is reflective of what could happen in, say, like a general election for the president, because you're going to have more moderating effects and you have to win those flyover states to get your electoral votes. So I don't know if Mamdani actually is now the face of the party. Maybe he is, and I've missed it. But I don't feel that, other than a lot of the loudest Democrats, that's the new future. What do you guys think?
But it's a symbol that more people don't believe the system works for them. And when you see what's happening with all the layoffs, it could become a big problem. I think we're very early in the cycle. I can't handicap which way it's going to go. What I can say is that the Fed needs to cut rates. People need to stop worrying about inflation. Whether you have 3% or 4% inflation does not matter one fucking bit. If you pay $103 or $104 for groceries, it does not matter. What matters is that we have an environment where entrepreneurship can work, small businesses can borrow, and regular businesses can borrow to expand, because we have to make sure that there's enough jobs out there, especially in an environment where large companies are cutting. So the only way you get that is being able to access the capital markets. So I would rather have a little bit higher inflation, if that's even a thing. I don't believe inflation's going up, but if the trade-off on the curve is more inflation for lower rates, I'll take it, because that means that there's an opportunity for more jobs for Americans. And that will ultimately fix everything, because we're still a free market society. And if there's a demand for services or goods, somebody's going to step in to fill the void.
I agree. And I just want to, like, the chat is having, obviously I made a bit of a political statement. Chat is having its typical meltdown. And what I want to say is, I think what we're seeing is the market reacting to it, not my personal political opinion. But I think that is something the market.
Dude, but I'm seeing comments saying that take is fucking stupid. How do you defend that take, Dougie? These comments are roasting you.
I mean,
I'm saying look at all the red. That's my evidence.
Well, I
If
mean,
airports are green, then I'm wrong.
obviously, the largest city in the country just went a certain way. So you got to take it somewhat seriously. Is it going to happen more? Who knows? But look, this is a clear indication that what these people have been taught their whole life, go to school, take out student debt, go get a job, and then they're living in debt. Obviously, they feel like the system's not working for them. And do they have a point? Absolutely.
Well, here's another way to prove Doug's argument. What happens when a politician says, if you vote for me, I will make sure AI doesn't take your job? Like, how are we not underestimating the fact that that could happen if
You're
600,000?
making me want to play this video so bad. I'm going to link it. I may stay up and watch it with whoever wants to stay. Barry Sternlich discusses the actual economics of running businesses in New York. I did not realize the numbers in his hotels. He actually said that he has to close banquet halls because I don't want to take him out of context. I'd rather just play the video. But he said he has people working part-time jobs that are part of the union that are getting paid $250,000 a year. And it's just the unit economics just don't work.
Yeah, that's New York City, man. Trust me, I've seen that too. New York City, like the amount of special interests that are all over New York City. You wonder why the Second Avenue subway cost literally for a few miles cost the amount that it did.
Yeah, I don't know if the market is pricing it in the way Doug says, but the idea that the market could price it in is not irrational at all. Because if there is any hint of socialism meaningfully taking over, or at least the general populace leaning towards that direction, and just the idea of big businesses not being valued in this country because of potentially AI taking your jobs and a Mamdani wins the presidency, that is something the markets will have to discount, and they could in the future.
Yeah, I think
Mamdani can't become president.
We're seeing the populism, which was aligned with Trump and the Republicans last time. Now the populism shift is going to be anti-AI, and that's going to be left. And that's going to bring all of the socialists who now control the party with it, because the old guard that I would call, the Democrats I grew up with, the Clinton Democrats, the Obama Democrats, they're all gone. It's now the AOCs and the Bernie Sanders of the world.
It's a real thing.
We need to make sure that there's jobs for Americans. And if AI and robotics are coming for all jobs, our elected officials need to figure out what we're going to do, because you can't have a society that doesn't have any money. Period. Full stop. Like, you have to figure something out. Whether Andrew Yang was correct in 2016, talking about by 2040 you need your universal based income. Whether you're going to put some type of tax on these things to fund everybody who doesn't have a job, I have no idea what the answer is. But these are the questions that they should be working on right now instead of squabbling about a shutdown.
I'm sorry, dude. I can't agree with universal basic income. I think that there's going to always be a need and a purpose for people. And the fact that like people can get free housing, get free food, get free welfare. I mean, bro, how many free programs are going to be out there? I'm sorry. I'm okay with helping people temporarily while they can get back on their feet. But we cannot turn society into, hey, you're born, here you go, here's free money.
Chris, if there's no jobs,
Chris, I'm not saying we should. All I'm saying is that if our jobs go away, if the jobs go away because AI and robotics take them, they're going to have to figure out a way for people to live.
There's plenty of other jobs that will come around.
No, but Chris, like, if there is no jobs, what do you think the government? They're gonna have to give money. They
There's
gave
gonna
money
be plenty of
during
jobs.
COVID. Like,
There's going to be plenty of jobs.
There's no
I don't
such
think
thing as money if there's no jobs, because jobs are how you take your labor, your sweat equity, and you turn that into, okay, well, if I'm a farmer and I'm growing potatoes, well, I don't want to eat just potatoes. I want to eat a steak. Well, I'm going to sell some potatoes, get some money, and then I'm going to go buy a cow or something with it. Okay, that's what the money does. You can't just like print money out of nowhere and give it to everybody, because there's no sweat equity that's gone into it. So the value goes to zero, and then we're living in Zimbabwe and we're literally lighting money on fire to warm our homes.
I have a cousin. He's been out of work for the last 5 years. Okay. I was talking to him. I was like, like, if you need anything, let me know. I'll help you out where you can, whatever. And I was like, like, where have you been looking? Right. He's got a master's degree, really smart guy. He's been working for like the last 20 years. He says, I've been looking for the last 5 months and I can't find anything. And I said, well, have you tried applying to like the local Kroger? Because I saw a wanted sign there. He's like, no, that's beneath me. I'm not going to do that. And I was like, bro, you're like in a really bad place financially. You're running on credit cards right now. Like, I'll help you, but I'm not going to be able to sustain you for the rest of my life. That's just not how it works, right? And I think a lot of people are going to have to come to the conclusion that whatever they went to school for, if that's not what is necessary for society and there are other job opportunities out there, you can go work there. You can do that temporarily while you're looking for something else. You don't need to just say, oh yeah, woe is me, let me sit down and do it. You can go and learn other trades, learn other skills. I think a lot of people need to wake up to that idea. And if you think that, oh yeah, you know what, like, we need to somehow just give people money, I don't agree with that. I think that there are jobs all over the place, but people do not want to look. They feel that a lot of jobs are beneath them. If you've ever seen Mike Rowe, when he goes to like a lot of jobs, it might not be the ideal job, and you're never going to find like, oh my God, I love this job, that's why I'm working. Bro,
Chris,
job is a job.
If you've worked at Amazon for 30 years and now your job is gone, what do you tell that person? You can't just tell them to go find a new, like, if they've been in a warehouse their whole life and the robots have taken over the warehouses, like,
so it goes deeper. It goes a little bit deeper, because I agree with Chris to a degree, but at the same time, in this scenario, and I'm not saying that this is going to happen next year or the year after, but we have to at least be willing to accept the fact that over the next 10 to 15 years, there's going to be such a fundamental shift between robotics and AI that a lot, if not all, fast food workers will be robotics. That Uber and trucking industry is going to be full self-driving. I mean, that is a reality that is a high probability over a 10 to 15 year time frame. There is also a probability that I will not be using my accountant, and that will all be automated. There are a lot of things that can happen over that period. Now, maybe new jobs will spurn, but there's also a flip side that they won't. And I don't know what's going to happen, but when you have the combination of robotics and AI at the point that we do, this is going to be much different than SaaS and cloud computing that reshaped HR and finance departments.
Well, here's a question, Stephen. Right now, you work in an office level job, white collar. If you lost your job today, you couldn't find a job for the next, let's say, 3 months and you needed to pay your bills. I offered you a job to clean toilets. Would you do it?
Have to.
I would too.
Period. Period.
I
You
would
have
too.
to. Yes.
I don't think that analogy, dude. If
But
you're
that's
if you're
not-
if, that's not if you're 55 and you're raising a family of 4 and your job gets taken by a robot, how do you start over life at 55? I mean, theoretically, you could clean toilets, yeah, but then the robots are probably doing that commoditized job.
But once again, I agree with Chris. What you have to do to survive. But at the same time, my point is more of a 10 or 15 year thing, not a 3 or 6 month thing, where at some point, a lot of these jobs just aren't going to exist. We're seeing it with coding right now.
I'm sorry.
Coders.
I'm sorry, dude. I disagree. Like right now, if I learned
Chris,
CS,
I'm not saying right now.
Right.
I'm not
I'm
saying right now.
even in the future, like let's say I have a job that got outsourced to some robot, right?
Right.
I would do the job that I didn't like temporarily, and I would retrain myself to a job that is necessary. You don't think that we're going to need robotics engineers in the future? If you were telling me, Chris, coding, there's no more coding jobs, I'd be like, okay, fine. I'll go find a job as an engineer. I'll go work. I'll go to night school if I have to go to night school. I'll do what I have to do to get and retrain myself.
Mechanical engineers are not being replaced by AI.
Yeah,
No, but
there's a lot of jobs.
During that time of retraining, you still need to pay your bills and eat food.
No,
and if you don't have a
and
job,
I'm okay with that, where the government does step in temporarily to help, but you cannot create a system where it's just like, yeah, go ahead, just sit on your ass all day. Here's some UBI and enjoy the rest of your life. Here's free housing. Here's free food. Here's some money for you to spend on GTA when it comes out.
Because the UBI becomes zero. If everyone has it, it's worthless.
It's a Band-Aid, not a solution.
I agree with that. I agree with that. And obviously money gets debased and currency gets debased if we keep printing it. But the point is, at that moment where a 55-year-old person needs to retrain their entire life, they still need to eat food, right? So maybe the government doesn't give them a stimulus check, but they give them food. Like the point is something has to intervene at that point, right?
We have it. It's called SNAP.
No, I get it, but like we're taking, if we have mass unemployment, it's got to be deeper than just SNAP benefits, right? Like Chris, realistically, if 5 million people in America got replaced by robots tomorrow, you don't think the government steps in, even if it's conditioned?
The government's job would be to retrain the existing population, support that to the next thing that actually is required. There is a shortage of plumbers. There's a shortage of roofers. There's a shortage of electricians. If you go outside of the nice, comfortable, white-collar bubble, there are tons of jobs that are currently out there that no one wants to. You can be a journeyman. There's lineman jobs. There's literally garbage collecting jobs. You could be a cop. You could be a fireman. You could work as a nurse. Do you know how much of a big of a shortage? Yeah, we got a big shortage right now in hospital systems as lab techs, as radiology techs. But here's the thing. You have to give people the incentive to retrain themselves if their current job gets replaced by either robots or automation or everything else. I think that jobs evolve over time.
Typing your data into a spreadsheet, that job is going away.
Right. But that doesn't mean that there's other jobs that won't be created.
But Chris, in all seriousness, over the next 10 to 15 years, you don't think that some of those things that you listed are going to be replaced by robotics?
I'm sure that whatever gets replaced by robotics, there are other jobs out there that people are going to have to retool themselves and get into another career. And look, it's not going to be easy. I'm not trying to say like, yeah, guess what? You go to a couple of classes in night school a week and everything's going to be fixed. Your life is not going to be fixed. But here's the thing. The answer isn't my life is over. Let me just sit on my ass for the rest of my life. The answer is pick yourself up, figure out what the next step is, and take every day, one day at a time, and figure out. And you know what? I have been in a position where I was at the lowest of lows and I've been at the highest of highs. The one thing I'll tell you, never quit. You never just give up and say, you know what? And here's the thing. When the government says, don't worry, here's money, here's food, here's shelter. You know what that does to the human soul? It kills it. Because any sort of like, what is it called? Like satisfaction in life goes away. And then what happens? You become dependent of the state.
That's the downstream on all the UBI pilot programs as well. Like I'm Googling stuff and everything says, oh yeah, blah, blah, blah. Their lives, they experience less mental strain than the control group, blah, blah, blah. But yeah, that's the first 2 months. The long-term effects of UBI are seriously detrimental to the long-term outcomes for people's lives.
Yeah, and
Because
society in general.
Because
Society
they
in general.
start living on that meager bit they get, and they lose their initiative, they lose their drive.
Yeah. By the way, I'm not a Marine. Don't call me Marine. I was a soldier. Marines are different. But I'm telling
I
you,
think
all
it's
these
interesting.
people. Yeah.
I think it's interesting that everyone focuses on the job loss, because that is like the scary part that affects people. But I think on the other end of that is the productivity side. So if you have so much productivity coming from this really powerful technology, then doesn't that mean that we're going to get lots of GDP growth, and that there's going to be a boom in assets and ROI and all these different things? So, that's why I like to hold assets, because you're going to get left behind if you're the one caught out without the job. So I agree with Chris here. You can retool and get back in the game, but there's a possibility that you can get left in the dust if you don't.
I mean, like I said, I grew up in a different mindset, that my job was always to figure out what the next step is and keep retooling myself, reinvesting myself to the point where I'm going to go with what society needs. I'm not going to be like the type of guy that's the problem with these Mamdani characters, where they just say, no, it's not the government. It's not your fault. It's always the government's fault. No, I'm sorry. There are times where people just have to say, you know what? I'll take accountability. I'm in a job that is getting outsourced. I'm not finding the right job. I need to find something that's in demand. Okay. I have 5 jobs lined. Like, I have 5 jobs in my brain. If I lost my job today, I didn't have any money whatsoever, I would either become a locksmith, I would become an electrician, I would become a plumber. Why? Because those jobs can't be taken over by AI. They need specialized skills, and they pay really good money.
I would become a comedian.
You'd be a terrible comedian.
Be on Universal Basic Income real quick.
Yeah, man. I mean, I see why Amit supports UBI now.
Okay, we got to end it there.
By the way,
that's the best way to end it. There's no other way we could. That was good.
My dad. He had a master's degree in chemistry and everything else, and he worked at a pharmaceutical company. But do you know where he worked right before that? In Farmingdale at 7-Eleven. In the morning time, I would go with him sometimes because there was no babysitting. So I would go with him in the morning and help him make papers. Do you know, back in the day when you got papers delivered to the newsstands, to the stores, like everything, they didn't just come. You had to take all the flyers.
Yeah, you got to put the sections together.
Yeah,
Chris,
you have to put all the sections together.
Why don't we start a 7-Eleven? Why don't we fulfill the Indian American dream? And
my brother has a gas station, bro. If you want that experience, that life for a couple of weeks, let me know.
No, first of all, my dad, I was basically in the liquor store for like 15 years, so I experienced that life. I feel like we need to live that life before.
Nah, bro, 7 days a week, 18 hours a day.
I know it was bad. I didn't see my dad growing up. I didn't see him. He was every time you got to worry about this one dude that walks in with a gun that's gonna stick you up. I mean, dude, it's not easy. My grandpa got stuck up 3 times, and he doesn't speak English, and he was cheap as hell. So the guy put the gun in front of him, and he said, "Open the register." First of all, he doesn't understand what "open the register" means. Second of all, he's not afraid of anybody. So he's like, he would start cursing the guy out. I remember one time there was a guy who bought a cigarette. My grandpa and me were there, and he wanted a light. He just wanted a little bit of a light on the cigarette. And my grandpa was like, "No, screw you. You got to pay for the matches." And he started cursing. He jumps over the counter, and I'm over here watching. I run to my grandpa. He's about to punch my grandpa. I was like, "Bro, here, take the lighter. Take the fucking lighter." And it was just like those experiences happen, and it was crazy.
My dad's been stuck up. He got pistol whipped. He's got literally like a giant gash right here from the time. I mean, look, you think, oh, it's just a retail store clerk, bro. Go ahead, be a retail store clerk in like College Park. And like one of my
I can't believe you just said College Park.
Nah, I'm telling you.
I know what you're talking about.
These people, like Indian people, and not just Indian people, but Koreans, Chinese, anytime you work in like some dangerous parts, they don't have a choice. They go and they work where there's need.
But I still think we need to okay, so not a 7-Eleven. Let's do a Dunkin'. Let's start a Dunkin' Donuts, Chris. We need to be proper Indians before we die. We need to like
you could say we become doctors. You don't want to become a doctor because Indian people are doctors too, bro. That's the other
I want to
stereotype.
rewind a second and go back to something that Amit said. He was asking, what happened if 5 million people were tomorrow replaced by the robots? And that had me thinking, I think maybe the only time in modern history we can think that something like that already happened, that would have been the demilitarization after World War II, right? Or maybe World War I as well, where you have this whole generation who had worked as soldiers now had to enter the civilian workforce because they all lost their job. There was no job left in the military, right? That was all being removed. So it happened, and the government pulled it off, right? I mean, arguably the 50s and 60s were a very prosperous time in the United States. So thinking about, we've talked about those job losses. Well, we might be talking about the equivalent of people losing their jobs in the military, and now they have to go find jobs in other things. Just saying, it worked before. Chris has probably some insight on that. I'm just thinking about this, so please, nobody think that I'm establishing an opinion. I'm just trying to frame a concept, and would be interested to hear people's opinions on it.
I have the perfect solution to society's main problems. I know it's going to sound a little sexist, but it's okay. I'm going to take the risk. I think there should be UBI, but only for women that are married. If you're not a married woman, if you're a single mom, we're going to take away benefits. If you are a married mom with a husband, you get UBI if you don't work. Why? Because that opens up all these jobs for men to do, right? And the women can stay at home and take care of the kids and cook food. And now all of a sudden society is fixed. Let's go back to the 1950s. Let's go back to a single income household again.
Chris said, show me the incentive, I'll show you the behavior.
Exactly.
He's trying
now
to be funny, guys. He's not serious.
Now you have women that are not incentivized to just mess around with those dudes that are just going to leave you. Now they're going to be with the Chris Patels of the world, who, we might be a little short, we might be a little pudgy, but we provide, right? That's the guy you want to be with, So I'm just saying, bring back short and pudgy. We need some help too, bro. DEI.
Chris is going to have all the single moms in his DMs.
Hell yeah.
How much they hate him.
Let's go.
Producer wife about to step in here.
Let's go.
Mrs. Patel about to end the stream.
Yo, this just turned into the Fresh and Fit podcast. Let's go. These women. We should take away women's rights to vote. Let's go. Is that? Come on. Can I get an amen?
Steve is so uncomfortable.
Can I get an amen?
Steve, this I had to deal with for 2 years. I had to deal with for 2 years on Finance Junkies. I had to deal with this. We only had
I can't even imagine what you had to deal with backstage.
Repeal the 19th Amendment and create a new one. Women don't get the right to vote and men get twice the right to vote. What's up? That's right. Now you're definitely getting demonetized,
Steve, this is your stream, bro. You're responsible for all of this. This is on you.
I mean, you can't be responsible for Chris Patel.
No.
By the way, guys, this is just a joke, okay? I have a wife who makes really good money. She makes more money than I do. I would be at a loss if we went into female UBI. Okay, so I'm totally against.
He's about to hear from his wife tonight because she watches every time.
She's asleep. She's got work tomorrow morning. You see the benefits of a dual income household.
Oh God. All right. Well,
it's time to sleep.
It is 12:15, and Amit needs his sleep.
What do you mean Amit? Everyone needs their sleep. What are you talking about?
Dude, I'm not going to sleep yet. So
I drank a Celsius right before I came on.
So this is what I'm going to say. We're going to call it for the night so Amit can go to sleep and everybody can go to sleep. I'm going to stay on for another 15 minutes. I want to play something, and I checked with Amit to make sure I can play it. I'm going to play part of the video that goes back to data centers real quick with Barry Sternlich. So if anybody wants to stay on and watch with me, you're more than welcome to.
All right, I'm out. All right.
Oh, Chris, you're on mute.
One more, Steven.
I had a blast. It's Red Pill Hour, Steven. Let's go. Let's go.
All right, guys, I'm out.
See you guys
later. I'm it.
Austin, you're actually going to go to the gym now?
Yeah, I'm still here. I'm gonna watch the video and then I'm gonna go right after. I'm on West Coast time, so I'm still
All
buzzing.
right. I need to share it with freaking audio. I just realized I made another rookie mistake. But this is so worth watching. Barry Sternlich is like he's one of the most brilliant guys. So just listen to what he says.
Wait, can I just apologize to all the females in the chat? I'm sorry, guys. I'm just joking, okay? You have the right to vote. You are.
I hope they know you're joking.
I know. I hope so too. You know, just letting y'all know. Please don't cancel my work and tell my boss that I don't believe in women's rights anymore. All right, take care.
Jesus, I just freaking shared it incorrectly again. All right. Here we go.
Technology, get back to that. I know you're heavily invested. You have a new part of your company that invests specifically in data centers. A lot of talk that they're overblown, overbuilt, too much capital going in. I was just talking to Brendan about it before, that, is there enough AI to fill these data centers? Will the returns really be there? What's your take?
Probably got $20 billion dedicated to space. I think it's a different issue than you think. Most of us don't build until we get a hyperscaler lease. So we get the lease from Amazon, Microsoft, Google, Oracle. We've gotten leases from all those companies, Oracle. What we're watching now is the creditworthiness of the tenant, and particularly Oracle, because Oracle's doing all these deals back-ended to Chat, and Chat is a startup that doesn't make money and requires hundreds of billions of dollars to grow to the scale they want to be. So yesterday, Anthropic said they'd hit revenues of $70 billion in 27. Chat's going to have to be bigger than that. They've made massive commitments to take power. So there's a subtenant. So we lease to Oracle, and Oracle is going to lease it to Chat. And if Chat doesn't have the cash, then Oracle's on the hook, and Oracle's credit default swaps, which is a measure of what people think of their credit, have gapped from 36 to 93 this morning. And everyone's hedging their Oracle risk because they're backing a startup who's competing against companies like Google or Amazon or Microsoft, who have massive balance sheets and really don't have to access the public capital or the kindness of venture investors at ever higher prices. I expect Chat will have to go public, and I think and then it'll be $1 trillion potentially. The last round was $500 billion, maybe $1 trillion IPO. We've never seen one of those. It's interesting. Companies that go public with $1 trillion IPOs that don't make money can't be part of the S&P 500, which is kind of fascinating. You'd have the 7th or 8th largest company in the country not be part of the S&P 500. It would be amazing. The space there's no question AI is going to change the entire world and do it much faster than anything we've ever seen before. Much faster than the internet, certainly faster than the Industrial Revolution. That is terrifying to me. I mean, I'm not so complacent, and I look at through my companies and how we spend money and what I can do with AI agents that I do with humans today, and it's terrifying for the people. I mean,
Do you expect to lose people?
I think we have to let people go, right? We can, with jobs of 15 people, can be done with a chat bot that costs me $36 a month. I mean, it's the white collar jobs, and you're seeing this is a very ominous sign, this rise in unemployment for the 18 to 24-year-olds, which I think has gone to 4 to 9%. What is that? Are we all slowing down hiring kids because Chat can do the work we used to give them, the grunt work, the real research tasks that they used to do? And it's pretty amazing when you start using this material. And we are, I think most companies, I'm on the business council with 250 CEOs of almost every industry, and they are laser focused on how to change their processes and save money. But at the end of the day, that probably means that there'll be less employment. And that's how you get these productivity gains. The hope is all these people that are let go will do something else. But if you're an accountant, they're an accountant. So if you replace an accountant with a chat bot or an agent, aren't they an accountant? Do they know how to do other things? Customer service, one thing we've looked at in our hotel portfolio is call centers. There's a couple million people employed in call centers in the United States. It's the easiest thing to use AI for. And we've invested in a company in PropTech that's an AI call center called Decagon. And they're going to take over a whole function for us in one of our hotel companies and drop the cost of the call from $7 to 30 cents. So I think we have to do it. Our competitors will do it, so we have to do it. We'll hopefully get there first. And they just took over Delta Airlines call centers, and they're going to take over a whole bunch more. And it speaks 258 languages. There's no unemployment benefits. It never calls in sick. It doesn't workers' comp. There's no such thing.
No,
and it has no fear and no emotion. So it upsells. It's like it asks you, oh, do you want me to book you,
Okay, you got to
tickets?
stop because I have 23-year-old twins, so I keep
Well,
pushing them in
they'll-
anything
they'll-
that
they'll
needs
be-
a human.
AI will be amazing for them. They're just gonna have to get on the train instead of in
Yeah.
front of the train.
Exactly. And Brendan, we were talking before about my concerns about data centers as a real estate asset class, and you had an interesting theory. Would you be willing to share it?
Sure. I was trying to trace all these pretty Byzantine and somewhat incestuous commitments that are happening between the large tech companies, between the digital infrastructure providers, and it's actually very hard to trace who's going to ultimately pay for it all. But ultimately, it has to be paid for in the economy. So what I was looking at is if someone could calculate
Or not.
or not,
Or it goes
exactly.
bust.
Or it goes bust. And I
Some
think
portion of it.
the way to just acid test whether it makes sense is if you looked at the amount of AI compute that would be required to fill all the data centers that are in production or have been announced to go into production, and then you assume that the tech companies have to make some profit on top of that to justify it, which they're not today, but let's assume they have to. Take any margin you want. Assume that's the revenue that's then therefore flowing to large language models and AI. What percent of US GDP would that be today if you ran that math? My fear is that it might be like 120% of US GDP. And so what we're building is, it's like, I guess a massive disclosure is I'm a believer, like Barry, in the long-term benefits of AI and how profound it will impact our economy. What I am more cynical and suspicious of is some of these arrangements around the supply of digital infrastructure, because while there are amazing pilots that are happening in companies like Barry mentioned, in call centers, there's also lots of AI pilots that are not working. And it's hard to decouple the personal benefits that like I get from using Gemini or using ChatGPT every day versus what corporations are getting. And so far, I don't think we've seen the profound bottom line ROE benefits of a lot of the corporate level AI investments.
So you're nodding.
No, I think, again, I was in the Middle East and two things came to mind that I learned on my trip. The Chinese are hot on our tails. Like we've created a bit of a monster, like it's a national focus in a way that the US can't focus, that they will be competitive in AI. They're going to get their data not from us, but they'll get them from Africa, sub-Saharan Africa, from India, and from other countries that they're allowed. DeepSeek will go in there with $5 a month, and Chat's charging $30 a month. And they will be like BYD is to Tesla. BYD makes an electric car at $22,000, and the cheapest Tesla is $40,000. So BYD is now the fastest growing car company in the world. I think it is the largest car company in the world, and it will be the even bigger dominant player. And the Chinese set out to basically dominate the auto industry. They subsidized the company until it got to profitability, and nobody cares what their profit margins are. So every car in Mexico City is a BYD, every car. And it's a great car. The worst part is it's a great car. I think some of these Chinese startups will take the same. They will undercut the profit models of some of our major tech companies, which there's only 330 million Americans, and you take out the kids. So they're going to have to be a global player and have globally applicable technology that be a must purchase for corporates around the world and for people around the world. But you're going to have this nasty little competitor below you, and that does most of what you need. It won't be looking at 40 million pieces of data and deriving new drugs. But for average people, it'll do everything you probably want to do, all the basic stuff. Like I have a Tesla that has that ludicrous mode on it. I've never used it in my life, right?
Other than when you test drove it, probably.
Yeah, but I paid, so it's like all those features on the car you don't use. And I don't know, whether you have a Bloomberg terminal or something, you don't use most of the features, most people. So you'll have a very affordable, cheap version of this. And I mean, we'll see how this plays out. I'm a huge believer, enormous believer in the technology. And also data centers will be powering other stuff, not just AI. There's cloud.
Quantum.
And quantum, which will go into the data centers.
Do you like quantum?
Yes. What do I know about it? I mean, we'll have it in 29 probably, 29, 30, and most of our data centers are being built to accommodate a quantum computer inside of them. So the market things, and then new new fuel sources. What will always be gas? I think nuclear is further off than people think. And even though the government wants to build nuclear, it takes a long time to build a nuclear plant, and it's expensive. When they produce power, historically, it's been multiples of what gas costs. So nobody really. There'll be other. We'll see what we do with. We pulled all the subsidies away from solar and things, but those are real credible. And it's very relevant because what nobody talks about in data centers is the rent. Rents have gone up dramatically because if you have power, you can charge what you want.
But there's more supply coming, so those rents
There's
are
more
going to
supply
moderate.
coming, but you need more power. If there is a way to produce tons more power, it makes sense that rents may not stay where they are today. In the meantime, nobody's cleared a $5 billion data center. Not a single one is traded. There have been a couple forward commitments to construction. Blue Owl's done a couple of them. But they haven't gone round trip. And everyone is wondering how are we getting out of all these data centers?
How are we?
We'll see.
Right now,
Thoughts?
the VCs are funding a lot of it,
Right.
and it's an odd dynamic because if
But
you
not
look
the out, not the exit of a fully leased 15-year deal they're not buying those.
or a lot of the companies themselves, it's not clear that
in the companies.
they're going to sell for what they're valued at because you have a lot of these large tech companies. So take, for example, Microsoft or Google. They have enormous and super high margin cloud businesses. And if you want to use AI, you have to be on the cloud. So it makes sense why they would want to fund LLMs and AI as perhaps a loss leader to subsidize their very high margin cloud business.
Which is continuing to grow.
Which is continuing to grow, and it's pushing more companies to the cloud. What's a little more non-obvious or mysterious to me is why VCs want to be a part of some of those funding stories, because it feels a bit like the large tech companies have almost baited venture capitalists to fund their private R&D for them. Because to Barry's point, it could be this race to the bottom around these models. And so what I think always happens in venture is venture capitalists are very good at looking at the past and trying to predict that the past is going to predict the future. And so they're using the software and SaaS revolution as a corollary for what's going to happen in AI. And I think it's somewhat of a false equivalency because SaaS is a super high gross margin business, and high gross margins get you out of a bunch of problems and a bunch of mistakes. You don't have that with AI. You have enormous CapEx and enormous OpEx. And right now, most of these AI companies are operating at gross margin negative. And so it's just a question of when they go public, to Barry's point, this could be the first company that is unprofitable at $1 trillion. That's a prospect we haven't confronted in the modern economy before.
But it could be real. Okay.
I think it almost has to
All
be
right.
real to continue this.
It's their plan. We're just
Yeah.
telling you what they say. They say we won't be profitable in 2030, right? And in the meantime, they need hundreds, I don't know what the number is, $100 billion of
Yeah.
capital investment to get there. So.
And that's not just people. That's like physical
But
stuff.
I think what you see as you get somewhat native to AI is the data sets will be very valuable. And a lot of us will just use, our own agents to help us with our own data.
Yeah.
And that's
Which will inform your investment decisions, et cetera.
right, but if you have access to unique databases, that will be very valuable. Somebody who has access to all the medical records, or and I think healthcare in general is going to be unbelievably powerful. The revolution in healthcare. I was at a conference where they mentioned that they were doing some research and they found out that if you've had what's it called? Shingles, or you're vaccinated for shingles, you're 65% less likely to get dementia. They weren't even looking for that. They just the AI found it.
AI found it,
It found the
yeah.
correlation, and that kind of stuff is mind-boggling. And they will design. We will have tailor-made drugs. He will be even hunkier than he is now.
And we're back to the
and
working
we'll live
out.
to 250 years old, and I'll be next to him saying, "Go, go, go."
All right. So I hate to round this out because I wanted to get to multifamily and I wanted to get more to the single family rental business, which I love. So I'm just going to ask you this. Brendan, if you had $1 billion today, where would you deploy it? Don't
Tough
ask Barry.
question. I'm not.
He
I'm
doesn't
not
get to
gonna
invest
Barry.
at that scale in prop tech.
Exactly. I get to invest in much
Well, you're
smaller
already
scale,
invested
so-
there. Take the whole real estate picture. Maybe you want to put it into single family rentals. Maybe you want to multifamily.
I'm actually going to say something that's almost the opposite of what we started this conversation with, which is we've kind of cast a very negative forward view of New York.
Please be
But
positive.
over a long-term time horizon, New York City is New York City. And people overestimate the durability of these like political vibe shifts. I mean, within 2 years of electing Trump, we elected Mamdani to run New York. And I just think these things move dialectically. In the long term, New York is going to be super valuable. So if I were a betting person and I didn't have to make a return in the next 4 years, I would bet on New York.
Okay.
You must be selling an apartment.
And Barry, I'm going to give you the last question.
I mean, our focus, you look at what we're doing with our newest fund, I mean, we're heavily investing in Europe, actually, not here. They've done the stimulus package. They have low rates. They're going to stay. They don't have really inflation. They don't have tariffs. It's amazing having a return from Europe and the Middle East. I can buy everything cheaper in Europe than I can here now because it all has slapped on tariffs with it here, including Hermes cosmetics and any gift I want to get my girlfriend or anything. So I think I think the U.S. I'm very worried about the political turmoil of the country and how it makes us angry. But barring that, the whole residential space, everything in resi, senior living, student housing, single family for rent, land, multis, they look to be attractive with the decline in rates and the decline in supply. And the markets in multis have held pretty much at 95% occupancy despite this huge increase in supply. So you would imagine if housing remains kind of unaffordable. I saw a number today that the first-time buyer is now gone from 31 years old to 40 years old. I mean, I think the apartment market should benefit from that. But you're holding on to your chair right now because it's the same-store sales comps are negative in most cities. So one thing I want to say, though, look at New York City and housing and look at Austin, Texas. Austin, Texas, freewheeling, you know, they overbuilt. Rents are down 20%. And supply had exploded, so rents are down. That's how the cycle works, right? New York City never saw overbuilding because it's too expensive to build here. It doesn't pencil. So Mamdani can't get housing built unless something changes in the cost structure. Either he builds it, which he doesn't have the balance sheet to do. The federal government isn't going to build it. And so who's going to build the housing? There's a company here. Related is one of the largest builders in Manhattan.
We're in Hudson Yards.
Said, we're in Hudson Yards. They said, I think it was last year, for the first time in 37 years, they had nothing under construction in New York City, not a single rental property or condo property. The numbers are the numbers. I mean, if it's not a good place for capital, the capital has to go somewhere else. So that's why, you know, I think we're like 54% invested in Europe, and the markets are better across the board. The rents are growing in Europe pretty much, except for the UK. The UK has issues like us. And it's funny, the southern economies of Europe, whether it's Italy, may be the best country in Europe. Usually it's just great pasta. Now it's a great country to invest in. And the same, Greece is turning around, and Spain. So struggling is France. They have a government that's kind of funny, and I really believe in the German economy long term.
So let me ask you,
So I'm not going to play the whole thing. I will link the video once again. It is fascinating video. I actually try to listen to everything that Barry Sternlich is on. I've been invested in his company for a long time, probably 8 or 9 years now. And I add on dips at Starwood Capital. It's STWD. It's a dividend play for me. And I just think he's a great CEO. So the beginning of the video was very interesting also. I mean, Dougie, what did you think? Have you ever heard him speak before?
No, I really like what I heard.
Yeah, so I don't know. We'll see where this AI thing takes us. I think that we got some legs left, and hopefully NVIDIA does well on Wednesday, and we see what happens.
Yeah, once again, it feels like the entire market is riding on NVIDIA's coattails. Hasn't it felt like that, like the last 3 earnings?
I hate it. I absolutely hate it.
I mean, the only way it could be worse is if it was all riding on OpenAI's earnings.
That would definitely be worse. But I don't like when companies get to be – I don't have a problem with NVIDIA getting to the size it is. I don't like that it represents so much of the NASDAQ and the S&P. I don't like that there's such a huge weighting toward 3 or 4 companies, because God forbid something happens with one of them, it actually will impact the market. But right now, I'm not seeing signs that this quarter is going to be bad. So we'll see what happens. But yeah, the broad market cannot rally quick enough for me.
Yeah, I would like to see this move into all the other sectors. How do you feel about um, the earnings we were getting where certain companies were starting to say, hey, this is the consumer's fault. And then other companies are saying, no, the consumer's fine. What was your take on that?
I got to look more into it. I mean, there's a lot of things that go into consumer sentiment, a lot of things with layoffs and credit. I need to look more into it before I can answer that. But I don't know. I do think that when I see companies so disproportionate, it goes back to something I said probably in the first 30 minutes, that we need to get realistic with valuations, and companies that are not making money should not be 25, 50, $100 billion companies. I mean, there's a lot of companies in the market that I think are great buys that have such large amounts of profitability that are trading at just valuations that don't make sense. That I do think we're going to get a broad market rally. I mean, look,
It makes sense on the high side or the low side?
I mean, they don't make sense on the low side and they don't make sense on the high side. I mean, look, I'll say it. I own a bunch of Palantir. I have calls against a bunch of it, but not all of it. And it does not benefit me for it to go down. But at the same time, when you look at a Salesforce versus a Palantir, it's hard to wrap my brain around why Palantir has the valuation it does. When I look at where ExxonMobil is trading versus, and just an Oklo getting the type of valuation it does, when Exxon's putting up 20, 25 billion in free cash flow, whatever it is, it's crazy to me. And the fact that energy is the entire energy sector is less of the S&P than NVIDIA is makes it pretty wild how big these companies have become. Like NVIDIA is bigger than the entire energy sector.
Did you see those statistics? I forget which pod I saw it on last week, where they were talking about just different Apple products being bigger than this or that entire business.
Yes. I mean, think about services. Just services is a 105 billion run rate.
Yeah, the comparisons they were making were crazy. Like iPad was like, I mean, and I'm going to butcher this, I'm getting it wrong, but I mean, it was something like, it would have been surprising to me as if they said, yeah, an iPad is basically Oracle, and it was, I mean, is that scale? I don't know if that's exactly the size of it, but a well-known large US company was the same size just as iPad. And a lot of people think that iPad is a failure.
Oh, iPad's not a failure. And it goes back to my theme of the big just get bigger. I truly believe the big companies will get bigger next year. Microsoft, I mean, when you think about their verticals, are companies leaving Office to go to Google Suite? No, that's not happening.
So are you a gamer, Steve, or did you ever play a lot of video games? I know you're more into the collecting.
I used to.
Have you been tracking what's going on with the Microsoft live service subscription in the last couple of weeks?
No, I was never an Xbox person.
Okay, so they did this subscription model.
Yes.
I don't know. Okay. Then I think the price went up 50% last week.
Okay.
Meanwhile, Microsoft is shutting down. They bought a bunch of studios, and now they're shutting them down because they're not making games. So it really seems like they might have a gamers revolt on their hands, where they're basically going to lose at Xbox. I mean, Xbox, the hardware is dead, because why do you need it if you can stream any game that you could play on Xbox from your PC to your TV to play it? You don't really need the hardware of Xbox.
Whoa. I did not know that. So I can go get an Xbox membership and play anything on Xbox on my computer?
It's pretty much for the most part, yeah.
Oh, I'm going to do it right now. You freaking kidding me? I didn't know that.
Subscription service.
How much is this?
So and then they've chopped it up. So
Xbox Cloud Gaming, is that what it is?
Yep. It was a fantastic value. And now they've started chopping it up. It's like, okay, well, now you need to have an EA one, and now you need to have an Ubisoft one. So they've kind of chopped it up by publishers. So I think this was a huge popular product, and I think the spreadsheet mafia has gotten to the games. Look up the Game Pass. It was a fantastic value, but now it's going down. Oh yeah, and if you don't have a gaming PC, you can just stream the game from Microsoft's. Like, they'll do all the rendering and they're just streaming you the video of it. So as long as you can like watch Netflix in 4K, you can game in 4K.
So it starts at $10 a month to join Game Pass?
That sounds about right.
Why wouldn't people do this? What do you get for it? Any game you want, or
no? They'll rotate games on and off their system.
All right, so here we go.
Netflix for games.
I found it.
Okay.
All right. Oh, thank you so much. This is gonna be my demise. So for $30 a month, the ultimate, you get 500 plus games.
Yep.
New games on day
It was
one.
$20 a month until like a couple weeks ago.
EA Play, Ubisoft Classics, Fortnite Crew coming November. Huh.
Yeah, it was a fantastic value.
That's interesting. So basically, you can do this and then just stream to YouTube if you want.
Yeah.
PC only plan. So what is this? PC only games?
I'm unfamiliar with their latest offering. I've had the Ultimate. Like, I haven't played a game in over a year, but I've been paying the subscription for Ultimate.
So let me ask you this. Do you think something like GTA 6 is going to be on this, or is that something you're going to have to buy?
Probably not on this service. I would think Take-Two is going to try to get at least all the early day one stuff. But, you know, like, Rockstar definitely has games on here. I mean, they've had Red Dead Redemption and other GTA games are on here for sure.
And I mean, it's interesting because Microsoft owns Activision Blizzard.
Yep.
Yeah, I mean, I thought about making a second channel and streaming playing video games.
You definitely would have people watch it.
I've highly considered putting in this stuff to make a second channel and start playing video games again and freaking streaming it.
What are you going to do? Play games and give stock tips at the same time?
No, I mean, listen, I don't give tips. I just talk about finance. But, you know, two separate channels. If
Yeah.
I'm in the mood to play video games, go play video games.
But yeah, so it used to be a great value, and I don't know if it's going to continue to be kind of.
Well, I still think that is a good value. I mean, think about it: $30 a month, right? That's not that crazy to pay $360 a year to have access to 500 games plus all the new ones.
Yeah, if you play 3 games a month, beginning to end, like a single player games, you're still making out like gangbusters.
Even if you do the premium at $15 a month, I mean, that comes out to $180 a year, and that's the cost of 2 or 3 games a year buy. And you're getting 200 plus games rotating. Like, that's a really good deal.
Yeah, it is. I mean, I'm sorry if I bring up a gaming addiction again, but
Well, I have a few on the computer. I mean, I was a big RTS. Like, I really like Age of Empires.
oh, dude, I need to connect you with my brother. He plays Age of Empires 2 like every single day.
So I bought the newest ones, and I was playing those. Like, I go hard on that. Like, I bought Warcraft 3 Reforged, and I freaking will play against 7 computers at once. Like, I love that shit.
Wow. Okay. Did you ever get into the 4X games?
4X? What's that? the racing games.
No, I can't think of the name of it all of a sudden. Like they have like Warhammer's the wrong one. Chat probably knows what I'm talking about.
World of Warcraft.
No, it's not World of Warcraft. Come on, I'm sure they've got. In fact, I know they have it on here because I have it in my library. Oh, let me find it. I liked Crusader Kings 3. That's like a 3.5x. Can't believe I can't remember what this is.
I'm actually wondering, is World of Warcraft still relevant? I'll put a poll up.
They re-released it, well, I think last year, but like Maddie was playing it not too long ago.
I know Matt plays it.
Like my next door neighbors play it. I mean, they got their husband and wife PCs sitting right next to each other. God, man, I can't believe I can't think of the name of this stupid game series.
Final Fantasy?
No. I mean, it's a lot of fun. So it gives you like your real-time strategy, but then it also has like in between the battles, which are like your RTS. Then it's more like hero development. And so you'll have different characters. And so you develop those characters and you power them up. But then when you get into like the RTS part of the game, then those individual characters are kind of like God mode heroes.
Yeah, so that's kind of the way, that's pretty much exactly the way Warcraft 3 works, which is really cool. Yeah, I mean, I like playing those games. And we'll see. I mean, I would do the Xbox thing just for the sports. Like, I love playing the UFC game and freaking Major League Baseball. I may have to go down the rabbit hole and just start a season and just see how I do.
All right. Well, I mean, it's a great place to start and play.
I'm going to blame you when I freaking go down an addiction of this.
Okay.
And if I get back into League of Legends, I'm probably not talking to anybody for like a year because that's all I'll do. I was so bad with League of Legends.
Okay. I have never played League of Legends.
Don't do it. It's like crack.
But, bro, how do they keep making soundtracks that are just absolutely fire?
Dude.
Did you watch the show on Netflix?
No, I refuse.
Oh, dude. Season 1 was so good. I mean, it's just excellent storytelling, character development. Season 1 was excellent. Season 2, yep, big old fat letdown. But
it had to have been
season 1 wasn't so excellent.
2014. I'm walking past Madison Square Garden, and there's banners for the East Coast Regional League of Legends tournament at the Garden. I'm like, what the hell is going on here? Like, I could not believe it, and it's just freaking wild. So wild. But yeah, League of Legends is ridiculous. There are people that are so good. I used to be really good. I tried playing a couple of maybe 6 months ago. I got so smoked. It was crazy.
Hey, playing Age of Empires is scary to me. Like, I mean, I would just watch my brother play because, we used to play back in the day where I had to like actually connect the PCs.
Oh yeah, through the LAN. Yeah.
On the LAN, right?
Yeah.
And we were like the first house in the neighborhood that had 2 computers, right? So like big time nerds.
So you guys are playing Doom 2 and freaking.
Well, he was too young. No way my parents would have let him play Doom. But yeah, I was in college, so I was playing Doom. I was playing Quake.
Dude, how good was freaking Quake? I had to have been like freaking.
It was so social too. Like that's the people are like, oh, gamers, he's stuck in his basement. No, we were like hanging out with all of our friends, playing. Like you had to take your PC to the room at Georgia Tech like we had to like prearrange the whole thing. It was very social.
Dude, people don't know what LAN parties were. Like, that's to me is crazy. Like, LAN parties were so fucking epic.
Yep, absolutely.
Oh my God. Yeah, Elon was a top 10 Quake player. I did see that.
I mean, can you be a top 10 Quake player and the top 10 Diablo 4 player and a CEO?
I mean,
I don't know where there's enough hours in the day.
did you see Rogan talk about his Quake addiction?
No. Talk about it.
Oh my God. You need to Google it. There's a clip on YouTube. He said on one of his, I actually think it was the podcast with the Counter-Strike dude. It's like episode, God, I'm so embarrassed I know it. It's like episode like 657 or 658. It's with C Nothing or something like that. And he was talking about his Quake addiction, that he actually paid to have a T1 line ran to his house when he was in his 20s and just started making money. And he would just be held up in the house playing fucking Quake.
That was expensive.
Yeah. And he talks about how fucking expensive it was to run a T1 line. I think this was when he was
You were
on.
talking about that. That's when the days when like the 56 kbps modem.
Yeah.
If you had like, because you had the Win modem and then you had the hardware modem, and it was like, oh, I have a 56K Win modem. It's like, well, not really. You're really just emulating 56K from 14.4. Sorry.
Yeah, the fact that he got a T1 line, that was like military grade shit at that point.
I mean, that was like you're running a web host with a whole T1. The company I worked at had a T1, or when I was a programmer, they had a T1 at that office, and it was insane speeds. Now, when I did go work at the web host, we had an OC 192, and that was a whole other level of speed. But today that's like, oh, your Wi-Fi.
But yes, we may have to go down the gaming rabbit hole. It could happen. Could happen.
Total War, Warhammer is what I was thinking of.
Warhammer. I never got into that. You remember Mech Warrior?
Yep. Mech Warrior was a lot of fun.
A lot of art.
Building out your mech and everything, and yep.
I used to play Mech Warrior.
Total War. Specifically, it's Total War. So they have a couple of different themes. They have like a Warhammer game. They have one that's called Rome. So it's like a Roman Empire theme. They have another one that's like Asian empires theme. But if you like RTS, I think you'll enjoy that.
I'll check it out. Yeah,
I mean, if you play Age of Empires, though, I definitely need to connect with my brother, because my Steam thing hits up all the time when I'm working during the day, and he's playing Age of Empires. So
yeah, I mean, I like Warcraft 3 better than Age of Empires, but Age of Empires is more intricate. Like, you really need to, and the reason I like these games is because you have to think so much about your unit of economics and how you build all the buildings and why you're building things in order to upgrade in a certain way. And the food component is so interesting with freaking Age of Empires, because you don't just build a farm, you're freaking actually farming. It's crazy.
did you ever play any of the like kind of sandbox games like Valheim or anything like that?
No, I was really just, what I did try? I tried freaking, I was so excited when BioWare made the Star Wars MMO, and it never took off.
It's still going.
It's still going, I know, but it never took off. Like, it was never big.
Oh, yeah. Well,
did you play it?
It could never get big. Yeah, I played it. It could never get big. And it's some of the best Star Wars storytelling, but it could never get big because they were they couldn't use the regular characters everyone knew. And all they could do was reference the old the Knights of the Old Republic, a couple of those characters. Now those were some fire games. Knights of the Old Republic, and then Knights of the Old Republic 2, which was released unfinished because Microsoft. But there was a project that like a bunch of the assets were all still in game. So the ending that got totally cut was eventually restored like 20 years later from the public just fishing in it. And so it's the original ending is now patched back in the game.
I thought the Old Republic, Star Wars The Old Republic, the MMO was freaking great, except when you actually played in groups, it sucked. Like, it was great single player, graphics were great, everything was cool, but endgame was it wasn't good like other MMOs.
It's still that way. The storylines are fantastic, and then once you're kind of done with the story, then there's not really a reason to keep playing.
Yeah, and it got too crazy with the flight. They got too crazy with that stuff.
Yeah,
but they did it. BioWare did a good job on that. I mean, man, I may have to start playing again. Something. It's either that or learn how to day trade. One of the two.
One of those is more expensive than the other.
Yeah, but one of them could be more profitable.
And
I've always, in all seriousness, I make fun of day traders. I've always wanted to actually learn how to day trade. I just never do it.
I know. I watch people do it, and you have to have. I think you have to have a certain pool of money you just do not care about.
Yeah, which is fine.
And so if Steve's 4 little words can operate for a certain pool.
Yeah, it absolutely can. I don't have the time to learn all the TA with it, because you got to freaking really just stay laser focused.
I tried it in crypto for a while, and what I learned with that was, okay, I could probably do it as a job if I had to, but I wouldn't want to, and especially not in crypto, because you couldn't sleep.
Yeah.
So if you day trade stocks, and if they ever go to true 24-hour markets, you have to quit because you'll never be able to sleep.
I don't want them to go to 24-hour markets at all.
I know, like Amit does.
No.
I think it's terrible.
It would be fucking horrible. Well, God forbid something happens. I mean, how crazy would it be knowing that you have X amount of money in the market and it's just trading live overnight and you're sleeping? Like, it's one thing to not look at the market all day while you're at work, like me today. I didn't have time for a second.
Same.
But I can still set up an alert to go off if something drastic happens and I need to log in.
Yeah. Robinhood was pinging me all day. I didn't look at my portfolio, but I knew it was happening. You know what I mean?
Yeah, no. Can't do it.
For anyone who wants to trade, or they want 24/7 or 24/5 trading, you can experience it very easily. Buy a whole bunch of fart coin, and buy yourself like $100,000 worth of fart coin and trade that, and then tell me how you feel.
That's never happening.
And you'll have plenty of liquidity, plenty of volatility. You'll have plenty of upside moves and plenty of downside moves to try to trade. You'll be insane, and you will not sleep after a few days, because you'll be stuck in a position that you're waiting to close out, and it's going against you, and you can't close it and you can't leave because you're already down too much. And do I sound like I've done that before?
Maybe once or twice on the weekend.
Yeah. No. It was work nights. That's no.
No, I'm just saying, maybe once or twice.
Yeah.
Yeah, we'll see. Maybe I'll do it at some point. We'll see.
Thoughts on ETH and BMNR? You probably talk about this all the time. BMNR is a leverage play on Ethereum. If Ethereum goes up, BMNR goes up. If Ethereum goes down, BMNR goes down more. I don't know why people keep asking these questions. I showed you the chart on Ethereum versus Bitcoin. There's a lot of room to run up just to catch up to
Oh,
Bitcoin.
wow. Ethereum's down to 3,200. I guess I'm buying more.
I have a feeling we haven't seen the bottom yet.
Where do you think Ethereum goes?
I
I mean, look, I can see it going to 2024
let me pull up my charts.
is where I have it at for buying me out. I mean, I have no idea how to read charts. It's not what I do. I look at numbers and fundamentals, but the remedial chart reading that I have done makes me think that we have a solid floor around 2,400.
Well, we have a solid floor at 300 or so.
Oh, sure, 300.
I have a boss in 2016. So when I worked for him, it was 2016, and he, his claim to fame or infamy was when Ethereum was 20 cents, he had $20,000 ready to hit the buy button on it, and backed out at the last second. And this is before it was on exchanges, right? So like, it was almost like a private. Man, I do not like this. I pulled up the Ethereum chart for the first time. This is a bad double top, bro.
Yeah, I mean, look, 2,400 is where I'm really seeing a solid floor coming in. As you look at that stretch after the tariff in May to July, it just kind of went sideways right there. So I think we could easily see this retest that.
I mean, I'm looking at the weekly right now, and just that double top is gross from 2022 to August of this year. Just a double top. That is gross.
Yeah, I mean, if it breaks 3, I wanted to buy more Ethereum anyway. So,
but your 200 weekly right now is 2,400. So we go to daily. What does that look like? Oh, that is just a rollover. It's like an inverse cup and handle almost. And now you're below the 200 day. But look, I mean, the RSI is just, I mean, it's been bouncing off of 25 in October 3 times.
I mean, what's a good number on RSI?
I'll share my screen here.
Yeah, I actually, shit, it's 102 already. Oh my God. I gotta get up. I actually have to get up.
I have tomorrow off. We work 980s, so I get every other
nice.
Friday off. So it's not a work night for me. You go to bed if you got to.
No, I got 5 or 10 minutes. Okay.
So here's my RSI band down here.
Yep.
Okay. So the purple is the actual action on it, and then the yellow line is kind of the smoothed out average, right? So I mean, you can see you're definitely trading in the bottom portion of it, and I have my areas set at just under 30 because I like to get a little bit of confirmation, and then just under 70. So those are kind of like where it's definitely undersold and where it's definitely oversold. And just because it breaches 70 doesn't mean it's time to sell, right? Look, this is the time when it was time to buy in, right? When it breached 70 back in what was this, July of this year. That was when it was time to buy. So if you just wanted to say, I just want to trade when everyone else is getting in, you could look for swings in the RSI. But yeah, this is So yeah, this just curves. It's like you don't have you don't have a straight line to any 3 points here.
Mm-hmm.
That means you're not in a channel. There's no structure to it. It's just rolling over. Yeah, I mean, we're gonna come test this level right here, 29 for certain sure, and then we're gonna test this accumulation section over here.
Yeah,
So you're around
that section's
2400.
that's that May section I was talking about, that 2400.
Yep. Yeah, because look where it was trading before it pounced to here. So we're gonna find out just how much demand shelf this is really gonna support right here at these levels. I keep losing my scale here, but yeah, there's a big demand gap here, right? So out of everybody who owns Ethereum, very, very, very few people own it at a price of 2,860. If you don't know how to
zoom out to 5 years real quick for me.
Let's see. So you want 20 to 25. There you go.
So that's 5 years.
Essentially, yeah. Here's 2020 here.
Okay, so when I look at this dip right now resembles very similar the two previous ones, and then when you go back to 2022, those two ones are very close together. I mean, to me, this is going lower when I look at it like this. Like you look at the one in the beginning of 2025, and then in July of 24, it's basically the same setup.
I mean, the monthly chart is hard to look at if you're day trading. Monthly is what you want to look at if you're playing really long theses. So, if you're planning on buying and holding BMNR, monthly's okay. Man, this is a very good ABC pattern here. This is like a classic correction.
This is just telling me that I need to buy more freaking Ethereum and BMNR.
What is unclear to me at this point is where is our next Elliott wave? Because you can see the Elliott wave here.
I don't even know what that means. What does that mean?
Oh, okay.
I know nothing about.
Here's a rabbit hole for you. So
I legitimately know nothing about TA.
So this is a one of those patterns that shows up kind of like the golden. Are you familiar with like the golden ratio?
No, I think what we're gonna have to do, we're just gonna have to do an entire episode of you just teaching me this.
So Elliott waves move up in fives, and they're fractals. Okay, so you have what's called an impulse wave. Okay, and that's a 5-leg wave: 1 up, 2 down, 3 up, 4 down, 5 up. Okay. Now, if we were to dive into this, what we would see is this leg 1 right here also had a 1, 2, 3, 4, 5. And the leg 3, 1, 2, 3, 4, 5, 1, 2, and then you just keep drilling down. It's fractal. It's fascinating. And then on the way down, what you get are ABCs. A, B, C. So that's a corrective wave. So the impulse wave is on the way up, and the corrective wave is on the way down. 5 legs on the way up, 3 legs on the way down. But here's the cool thing. On the corrective wave, this is another fractal. There's a whole other ABC built in here. And this is an impulse wave. There's that 1, 2, 3, 4, 5 built in there. Like if we go back to the week here. going to throw off the look a little bit. But you can even see this. Here's a decent example of it. See how this one leg is actually a fractal?
Yes.
And I bet you if we went in here, we would be able to do that again. Not quite as good on that one, but I mean, you see it in lots and lots of places. And you can, a lot of times you can scale down in the time zones. But you can do this with crypto. You can find this in all sorts of things. We look at Google. Do you know what a Head and Shoulders is?
That I know.
Okay. You can see I was making a prediction and got this one wrong. So I do TA, and what I was telling Amit, just texting back and forth with him, or maybe I was telling Austin, was I feel like I'm pretty good at TA. I'm probably right like 70% of the time, but I've never had the guts to trade it. But I mean, I can go through and pull up a bunch of these charts, and you just like,
yeah. So what I would like to do,
he nailed these levels. Like, look how old this chart is, right? Like, it's just like, look at these levels that just got pulled forward. Like, I haven't visited the Lumen chart in years.
the fact that my brain is still going at 1:11 in the morning is freaking crazy. Like, think about this. I worked all day. I wrote 2 articles outside of work and then started streaming at 9:30 till now.
You're a machine. I mean, it's not
Can't be stopped.
it's not like you're in your 20s anymore either, you know? Like,
No, I'm not. That's the crazy part. Like, when Amit tells me he's tired, I'm like, dude, you're 27. You have no reason to be tired. Like, I'm over 40 and freaking I can just go. Like, if Amit saw me in my 20s, he wouldn't know what to do with himself. That's right. It's power of the whole milk.
it probably is. Have you tried any of the milks that have like the caffeine added to them?
No, I get my whole milk from the farm and my caffeine from Starbucks.
Now, you do have this crazy genius idea about brewing your coffee over ice cream, though.
Oh,
Okay.
Doug, it's heaven.
I have not tried yet,
Okay. This
but
is
I
what
feel
you
like
do.
it needs a splash of bourbon at this point.
This is what you do. You go get a pint of Haagen-Dazs coffee. It cannot be coffee chip, can't be another brand. It has to be Haagen-Dazs coffee. You put a scoop or 2 in the bottom of your cup, and then you brew your cup coffee over it, and it is fucking delightful.
So when you say you brew your coffee over it, meaning like I make my K-cup and then I pour it over the ice cream?
Right. So if you're using a Keurig, I'm going to assume, or like an espresso.
Yeah.
Okay. So you put the ice cream in the cup first. You put the
Okay.
cup underneath, and then you hit start, and you let it brew into the ice cream.
Okay, how is that different than like brewing it in a cup and then pouring it over a cup of ice cream?
I mean, you could do that too. It's just more efficient to put it in a cup, put the cup in the coffee holder, hit start, and have it brew into the cup that already has the ice cream into it.
Okay.
because it melts everything, and you can just once it's done brewing, you can take it away and drink it.
And this doesn't work with like vanilla ice cream. It only works with coffee ice cream.
I've never tried it with vanilla bean. I've only tried it with coffee ice cream, and my idea about it was, what if I use coffee ice cream instead of half and half? And I tried it once. I'm like, this is fucking delicious. Like, it does two jobs at once, and it is so delicious. Like, I'm telling you, just try it, and you're gonna be like, I don't know why I haven't been doing this my whole life.
I'm intrigued.
Now, I am not
probably gonna have
recommending
to
doing
put a
this
little
in
bit
the
of bourbon in
morning. I'm recommending doing this when you get home from work and you can just relax. Just throw the ice cream in there and just freaking brew it on it. Oh my God.
We're talking about like one small scoop.
Oh, not small scoop. I'm talking about like getting a tablespoon, putting like two scoops with a tablespoon in there.
Okay.
Like a healthy amount, a good amount. Like you gotta fill the bottom of it. I'm not talking about
But not like you're making like a root beer float where you like have a glass and you're like filling it with ice cream and then you pour it out.
Like
it just boils out the top.
I'd say up to like here.
Okay.
You know, like an eighth of the cup, or maybe just under a quarter of the cup.
Okay. So it's not really an ice cream delivery device. It's
no.
You're really...
No, it's like you still want to enjoy your coffee, but you just want it to be more heavenly than it already is.
Okay.
People are saying stop it. I'll get out of bed right now and make myself a coffee at 1 a.m.
I'm about to. And people are wondering why I'm awake, and I was like, I drank a Celsius before I got on this call.
Yeah, stop freaking with the Celsius. Coffee is the way to go.
Do you have something against Celsius? You
handle
don't
the
like
acid.
the taste?
I can't handle the acid of coffee.
Shit's so bad for you.
I can't handle the acid in the coffee long term. Like I can have like a cup a day, but it can't be like my normal thing.
Well,
I love this is the one I drink.
I can't tell what flavor that is.
Looks like that's peach.
Yep, it's a peach green tea, fizz free. So no carbonation, and it's just a peach mango green tea.
If I'm really in a hurry, you can get caffeine pills for like 10 cents each. On like, it's so easy if you're just in a rush to get out the door, but you want some caffeine and you don't have time to get your Starbucks or to make your coffee. Caffeine pill, efficient.
Have you tried a wake up bar yet?
Now, is that like a protein bar with caffeine?
Wait, hold on.
Yeah.
Are you talking about Jesse's wake up bars?
Yeah, they're called the brand is Wake Up. And
Yeah.
they're like chocolate covered bars. They're like this big, and they're like one bite equals one espresso. 2 bites
You're
equals
not gonna believe this. Let me just make sure.
It's only a matter of time until Dutch Bros gets those in.
This is made, Jesse's Wake Up Bar. This is made by somebody I went to high school with that I used to be friends with. Believe it or not, it's freaking wild. The guy's name who owns this company is Jesse Osher. Yeah, that's fucking Jesse Osher.
Really?
I went to high school with
Your
him.
boy?
He's not my boy. Like, we were friends. I haven't seen him in 20 years.
All right.
But yeah, that's Jesse Osher.
We're gonna add that to the cart. And I guess everybody gets to see my Amazon queue there.
All right. I'm going to get going. I have to function tomorrow and be up at 7. That's the other thing. I don't even need a lot of sleep to function. Like, I don't understand why Amit needs sleep. He's young.
He's young, yeah. Hey, thanks for having me on tonight, man. I had a good time.
I appreciate both of you coming on. We got to do it again. And Dougie, we need to figure out a time, and you can teach me TA. I should learn.
Yeah, we'll do some gaming, and we need, and you know, you've got like somebody who's actually watched movies and TV to actually talk to. So
Oh,
you
sure.
don't have to try to talk.
All right, so we're staying on till 1:30 then.
Okay.
And we do 12 minutes. All right. Let's start with mob movies. What are the top 5? Now, keep in mind, gangster movies cannot be mob movies, but mob movies can be gangster movies. And I'm sure you know what I mean.
Okay. Well, I mean, I don't really have like a mob movie that I really go to. But Casino, like if that's on, I'm watching it. Like
I'm with you.
If Goodfellas is on, I'm watching it.
I'm with you.
I don't love The Godfathers. I enjoy them. I respect them as individual achievements in film. And I love all the quotes and everything, but they're not something that I put on all the time. Heat is not a favorite of mine. I like it.
Heat's a top 3 movie of mine.
I'm aware.
Yeah.
And I'm not saying it's bad, but it's not one I'm like, oh, this is on. I'm stopping what I'm doing.
Yep. I get it.
Doug, is this true what Michelle's saying? That K-pop Demon Hunters is your favorite?
Oh, I'm just saying the song, the golden track on YouTube Music, not Spotify, not one of the big ones, YouTube Music, has like 1.2 billion listens. Okay? I'm responsible for a non-zero portion of those.
Have you seen this thing, Steve?
I know what it is because of my nephew, but I learned about it the other day. It's fucking crazy.
It is crazy. I thought this was the stupidest thing ever. Someone whose taste I like in movies said, put aside your perspective and your prejudice against stuff that you think is a little stupid and give it a watch. And it is certainly the most fun movie of the year. If you liked like the 90s Disney movies, this movie is a child of that particular
So Dougie, I think you're a little bit older than me, so you're gonna know everything I'm gonna say. Like, you a Days of Thunder guy?
I'm not a Days of Thunder guy. They didn't nail the ending. They had me up until like the last 5-10 minutes, and then it just kind of, pardon the pun, runs out of gas.
I'll race you to victory lane. Like, come on.
Have you seen F1 yet?
So I have not. I want to see it in the movies so bad. I have not had time.
It's made by the same crew that made Top Gun Maverick.
I know.
Director, producer, like the same gang. Okay.
It's on my list. Have you seen Rush?
Yeah, great movie.
Great movie. Great racing movie.
I mean, hey, Ford versus Ferrari was absolutely a fantastic movie.
That was a fantastic movie also. Yeah, I'm a big 80s and 90s movie person. Like Ferris Bueller's Day Off. Love that movie. Freaking.
Yep. That's a stop what you're doing and watch it movie.
Yeah, absolutely. Like if Dazed and Confused is on, I'm stopping and watching it. I mean, there's just so many good movies from back in the day, like Planes, Trains, and Automobiles. Like if you can't laugh at that movie, I don't know what we're talking about.
It's a mad world.
So Steve, on your recommendation, you've mentioned that movie a few times. I watched it last weekend.
Planes, Trains, and Automobiles?
Exactly. I had no idea what I was getting myself into. I didn't realize that the bit was going to keep going. I just turned 30.
All right, so I'm interested to see, did you like it?
I found myself relating to the guy, who was traveling. I forget his name, the businessman. And I'm like, I was so frustrated with the other character. I couldn't even get all the way through it. I'm like, oh my gosh, it just keeps getting worse and worse and worse.
That's why it's so funny.
Hey, Michelle, I watched, I think, the first 8 or so episodes of Demon Slayer, and I have to say that I really, really enjoyed it. The problem is it's on Hulu, and that means I have to watch ads, and I am not about that life. So when it comes off of Hulu and it goes on a service that I don't have to watch, 12 minutes of ads for a 20-minute runtime of the show, I will finish it in a freaking week. It is on Netflix. Okay, I'll check it out.
Yeah, I need to watch something. I'm so annoyed. Do you guys watch Power by any chance?
No.
Really gangster TV show. The spinoff is out, and of course, it's on freaking Stars, and they're putting out one episode a week. It's so annoying.
I feel like we just reverted back to cable TV. We used to have one streaming site for everything, and then they've just made it cable 2.0.
Yeah, that's the whole reason why I'm paying you assholes. Like, I want everything at once. It's ridiculous.
They just did that with Mayor of Kingstown.
Yeah.
Started the new season, and I was so thrilled to watch it, and it was like, what do you mean only one episode?
Did you watch Tulsa King also?
Yes. Haven't started the new season yet.
Neither have I, but it's good.
Loved Landman.
Oh, look at all this. Tommy's the best character in the whole freaking series, everybody. That's right.
I'm gonna throw something out there, and I want your opinion on this.
Yeah.
And this is one of my favorite movies, and this is a stop what you're doing and watch it movie.
Okay.
And I think this is actually a gangster movie. It might be a mob movie.
Okay.
JFK.
JFK is a full-blown stop what you're watching. Now, you and I grew up in an era where that was just one of the most talked about things and debated things. I mean, that's like the freaking
maybe, but I never saw the movie until like 2003 was when I finally watched it.
Yeah, I was probably in the same area. And it's like D.B. Cooper, like anything with those things are awesome, but so many people went down the JFK rabbit hole, and that movie did such a good job of just making everybody like actually believe that the freaking government took him out.
I mean, I don't know who killed JFK, but it wasn't Lee Harvey Oswald. It could have been my grandfather, but it wasn't Lee Harvey Oswald. Or he was one of the only thing that I'm convinced about, I've done a significant amount of research into it. The only thing that I'm convinced about is there was not one shooter. Yeah, 100%. Well, and
I've talked to too many people in the military to be convinced that that's one shooter.
It couldn't have been one shooter, and they do a great job of proving that in the movie.
Right.
Couldn't have been one shooter, and it couldn't have. And if JFK or not JFK, if Oswald was the guy in the book depository,
right,
in the Overwatch position, he's not the guy who killed Kennedy. Maybe he took a shot. Maybe the rifle wasn't a plant. Maybe that was the actual rifle that was fired. But it's pretty hard to believe that. Did you ever read James Ellroy's American Tabloid?
No, I bought freaking James Garrison's book about JFK and read it. The lawyer who
yeah
Costner played. I actually bought his book and read it.
Wow. Anyway, American Tabloid is it's another take on JFK assassination, just from it's a fictional historical fiction, right? But you have a lot of really good history worked in there as well.
I'm gonna have to freaking read it. But yeah, no, JFK, I wouldn't consider it a mob movie. I don't even know what I'd consider it. It is just, it's a top 20 movie for me. Like, it's that fucking good.
Do you remember a few months ago when Trump was like, we're releasing all the JFK files, and it was about to come out that weekend?
Yeah.
This was funny. Amit was like, I'm going to watch JFK and find out what it's all about.
I tried getting him to watch it. He's like, bro, this movie sucks.
I was texting with him, and I was like, oh, if you're going to watch it, I'll rent it and watch it. I think it was rentable on Prime at the time. I'll put it on and I'll watch it too. I watched the whole movie. I text him back, and he's like, and I like look back at the timestamp. I don't think he made it through the opening credits.
No, he can't make it through. Every movie that he's tried to watch that I've recommended to him, the fact that he did not like old school, it's like, are you kidding me?
Yeah.
Like, what are we doing?
It's what I think K-pop Demon Hunters is actually tailor-made for Amit. It's 90 minutes. It starts with a bang. It moves quick. The animation is bright and colorful, and everything moves really quick. And like I said, and the whole thing's done in 90 minutes. It's tailor-made for Amit.
Did you ever watch the show 24?
Yes, fantastic.
Dude, what was the best season?
I feel like 5, but it's been so long since I watched it. I probably can't tell them very far apart.
During the pandemic, I went.
I didn't get into it.
I watched.
I didn't get into it right away. I got into it late, but I definitely got to the point where it was appointment television.
Oh, I watched every freaking season again during the pandemic. I gotta tell you, I thought the newer seasons sucked when they first came out. They're actually pretty good. Like 6 was actually really good with John Voight in there and Renee Walker I gotta tell you, that show's sick. There's so many good shows.
Yep. Oh, who was the redhead girl that they introduced first? She was like in for like 1 or 2 years. Annie Wershing. She died early, like a couple of years ago.
All I remember about that show was that they constantly committed the cardinal sin of like cinema time. So you'd have a clock down to like a bomb exploding that would be 2 minutes, and then they would roll 10 minutes of film, and then they'd get to the bomb just in time.
Yeah, that's Renee Walker. She died.
Yeah, 45.
Oh, that's horrible. Horrible.
Yeah, that took me by surprise, and it was like it was last year.
Unbelievable. Well, I do have to go to sleep, otherwise I'm gonna stay up all night with you guys, and I can't do that because I actually need to be functional.
Yeah, if you ever want to talk movies or TV shows, I've actually seen a lot. So
yes, I will hit both of you up, and we'll do another stream.
Awesome.
Thanks for having me on, Steve.
Thanks for having me on.
You guys.
Later, bud.